Hello, my dear CA intermediate students. The most awaited mighty 50 on GST for CA intermediate is this video. And yes, many students have been asking me, following up with me, that they were awaiting for this mighty 50 questions. So these 50 questions are the top 50 questions covering the entire portion in GST for CA intermediate November 23 exam. So I have analyzed the papers, and maybe if the paper is difficult, how the questions could be, considering that I have given. And this is also like a revision of entire GST that is there for your exam. Okay, now what you need to do is that you need to just patiently listen to each and every question, and if you find that this question you want to revise once, so whatever is the time of this question, you just comment, like post it in your comment. So you put it as a comment. So this is so on so timestamp, and this is the question, so that one day before the exam you can quickly revise this and you can go for the exam. Okay, and what I'm going to do is that each and every question I will give you a brief concept, and thereafter I will explain the answer related to that particular thing. So therefore you don't have to refer to any other concept book or etc. So just you can dedicatedly see this, and the PDF related to this is available in the description below this video, and even it is there in my website under downloads. So tharunraj.com downloads, and you can also see this in the Telegram group. So there is a Telegram group, THARUN'S GST. So just go to the Telegram and search for THARUN'S GST. You will be able to identify my group, and you can join in that group, and you can post your queries, whatever queries that you have. Okay, so now without further delay, let's start with this. So first question, this first question is related to input tax credit, that is 17 subsection 4, the option available to a bank, financial institution, NBFC for payment of GST. So what they can do is that either they can go for proportionate ITC method, or they can go for ad hoc ITC method. Under proportionate ITC method, they will take the ITC proportionate to their taxable supply. Under ad hoc ITC method, 50% of the ITC, whatever is the eligible ITC, that will be taken. So this question is based on that. Now look into question number 1. UCO Bank has a branch in Aurangabad engaged in supply of services by way of accepting deposits and extending loans, opted for the option to avail credit of 50%. So they are going for 50% ad hoc option, of which input tax relates under section 17(4). It has a head office at Pune. Input tax credit CGST, SGST available for the month of October 2017 is 1,20,000, which includes the following. Determine the amount of input tax credit that can be availed by UCO Bank. So now this is the total ITC. So in this total ITC, so 1,20,000 we need to analyze. So inward supply from a distinct person. So one branch receives services from another branch of the same bank, distinct person, they can take full ITC under 50% option. Inward supply with respect to distinct person, they can take full ITC, and blocked ITC and non-business purpose they should not take. So remaining ITC 50% they will be taking. Okay, so now from this 1,20,000, so you see the service availed from distinct person, that is from Pune head office. Actually we can take full ITC. So where is this branch located? Aurangabad. And distinct person, that is from Pune head office, 27,000. So this 27,000 they can take full ITC. But first you eliminate from 1,20,000, 27,000. Outdoor catering services received for its employees. Outdoor catering service received for its employees. Actually outdoor catering is a blocked credit, and we have exceptions, but the exceptions are not covered here. What are the exceptions for outdoor catering? Number 1, inward supply, outward supply in the same category, not applicable. Inward supply part of outward supply, no. Under a statutory obligation incurred by employer to employee, that is also not applicable here, which means that it's a blocked credit. So 32,000 we will take out. So, but on this 27,000 we will get 100% ITC. But why are we taking out? Because first we need to know what is the eligible ITC on which 50% of the credit that can be taken. So how to find out that eligible ITC? So that eligible ITC, what we need to do is that first we need to take the eligible ITC as total ITC minus, so blocked ITC. total ITC minus blocked ITC, because blocked ITC we cannot take credit, minus ITC with respect to non-business purpose, ITC with respect to non-business purpose, and thereafter minus ITC with respect to inward supply from distinct person, inward supply from distinct person, okay, distinct person. So this is called as the eligible ITC, and in this eligible ITC we will take 50%, and thereafter we need to add and ITC with respect to inward supply from distinct person, ITC with respect to inward supply from distinct person, inward supply from distinct person, so into 100%. So we'll take 100%. So this eligible ITC plus ITC with respect to inward supply from distinct person 100%. So this will be called as the total ITC, availed. Total ITC availed. Okay. So this under ad hoc option, under ad hoc option, under ad hoc option. So now here what we need to do is that first we need to take the total 1,20,000 minus 27,000, but the 27,000 100% will get. So on this 32,000 no ITC, and 11,000 goods obsolete and value of which has been written off in the books. So we have one blocked credit. Purchased goods are lost, destroyed, written off or disposed of by way of gift or free sample is a blocked credit. And what is the exception? If the gift or free sample becomes supply, then we can take ITC on the purchases. So in this case, if you see, it is written off in the books. Written off in the books means what? So we cannot take the ITC, it's a blocked ITC. So that also you eliminate, no ITC with respect to this. Auditing services, we don't have any blocked credit and it is used in the course or furtherance of business. So we can take ITC with respect to that. So don't deduct, it will be part of eligible ITC. Then goods for personal, don't deduct anything, just ignore. Then goods for personal use of employees. So we have a blocked credit with respect to this. Any goods purchased and used for personal purpose is blocked credit. And even we have one more point also, section 16, conditions for availment of ITC. So the inward supply should be used or intended to be used in the course or furtherance of business. So in this case, the 7,500, we will not get ITC. Now what we need to do? From 1,20,000, you take out these four. From 1,20,000, you take out these four. 27,000 minus 32,000 minus 11,000 minus 7,500. That is 42,500. On that 42,500, you will get 50% ITC. Okay. So 42,500 into 50%. What is 42,500 into 50%? That will be 21,250. Plus inward supply from distinct person, full ITC you can take. So 27,000 into 100%, that is 27,000. So what is the total ITC that can be availed? 21,250 plus 27,000, that will be 48,250 will be taken as the answer. So 48,250 is the ITC that can be taken. Okay, but we can also do it in a different manner. What is a different manner? First, 27,000 we will take full ITC. Okay, 27,000 we will take full ITC, and 32,000 we will not take, 11,000 we will not take, 25,000 we will take. So 27,000 we will take full, and 25,000 we will take only 50%. So 25,000 into 50%, that is 12,500. And what is the remaining? The remaining is 1,20,000 minus all these things. 1,20,000 minus 27,000 minus 32,000 minus 11,000 minus 25,000 minus 7,500. So that will be 17,500. So that 17,500 into 50%, that is 8,750. Now also you will get the same answer. So 8,750 plus 12,500 plus 27,000, that is also 48,250. So anyway you can do, but the answer should be 48,250. That should be taken. Okay, so that's how we need to arrive at the answer for this question. This is related to which one? 17 subsection 4, ad hoc ITC. But this facility is only for a banking company, financial institution, NBFC. For others, what they need to do? They need to calculate the proportionate ITC. How to calculate the proportionate ITC? total ITC into taxable turnover divided by total turnover is a proportionate ITC. And this option, when they need to exercise, they need to exercise in the beginning of the financial year. That option exercise in the beginning of the financial year will be applicable throughout the financial year. So either proportionate ITC or ad hoc ITC, they need to select in the beginning of the financial year, and that will be applicable throughout the financial year. Okay. So then question number 2. Question number 2 is related to, one winding up. So annual return versus final return. Okay. So listen to this question. So this is from the latest RTP. Batra Limited, a normal taxpayer, is winding up its business in Rajkot. The tax consultant of Batra Limited has suggested that Batra Limited will have to file either annual return or the final return at the time of voluntary cancellation of registration in the state of Rajkot. Do you agree with the stand taken by the tax consultant of Batra Limited? Offer your comments and ignore the aggregate turnover of Batra Limited. So when a person is required to file the annual return every financial year, he need to file an annual return. And whenever there is a cancellation of registration, either he makes application for cancellation of registration or proper officer initiate cancellation of registration. After cancellation of registration, so there is one final return that needs to be filed, and that final return needs to be filed within 3 months from the date of cancellation or order of cancellation, whichever is later. Okay, that is the time limit for filing final return. Annual return needs to be filed by 31st December of the succeeding financial year. Now, for a particular financial year, if we have done the business, we should definitely file the annual return even though our registration is cancelled. Okay, so here what is happening is that in that financial year, okay, so a normal taxpayer is winding up the business. The tax consultant has suggested that Batra Limited has to file either annual return or final return. No, actually they need to file both, not either annual return or final return. First, if they have done any transactions during that financial year, they need to file the annual return for that financial year by 31st December of the succeeding financial year. Plus, final return is also required to be filed. That final return needs to be filed because they are winding up the business, means they have done the cancellation of registration. So after their cancellation of registration, so 3 months from the date of cancellation or order of cancellation, whichever is later, they need to give the final return. So therefore the stand taken by the tax consultant of Batra Limited is not correct. So this is what we need to write. Okay. And they have given small explanation, but you can write in detail also about annual return time limit and the final return time limit. In this case, so Batra Limited is winding up its business, thus applied for cancellation. Therefore, it is required to file both annual return and final return. Like that, we need to write. Then next one, question number 3. Question number 3 is a very good question. So this question is based on computation of value of supply for payment of GST based on purchases. So how they are arriving at the value of supply is based on cost plus profit method. So cost plus profit means, so they have given the purchase data. Based on the purchase data, we need to add the profit and arrive at the sale price. So on that sale price, we will be paying the GST. And on these purchases, there are some purchases on which ITC available, some purchase ITC not available. If ITC is available on the purchases, then we will not take the GST paid into the cost of purchase. And suppose if ITC is not available, then the GST paid on purchase, we will be adding to the cost. Okay, so that we arrive at the cost, and plus profit will get the sale price. On that sale price, GST liability will be outward liability. And on these inward supplies, so wherever ITC we will get, so that ITC we will adjust with the gross liability. So this is a question related to that. See this. The following are the details of purchases, sales, etc. affected by Messrs. Ashan Company, a registered manufacturer under GST Act 2017. Purchase of raw material A from a local dealer, 86,100. So they gave all the purchases and expenses details, and they gave a profit here on the 10% profit margin on total cost. So profit is 10% of cost, and we get the sale price. And here only 70% of the production is sold within the state, and applicable GST is 12%. and all these are purchase details. Raw material A purchase, raw material B purchase, and capital goods is also purchased, but capital goods fully we will not take it into the cost. Why? Because in case of capital goods, only the amortization or the depreciation pertaining to these goods should be taken. So here depreciation at 15% to be charged. What is the meaning of this 15%? Means related to this production quantity. Related to this particular production quantity, a particular machinery is used, and in that machinery 15% of the machinery cost is allocated towards this production. So this is like amortization. So amortization, what we will do, we will take the cost of the asset and we will amortize for the produced units. So this is related to that. So depreciation at 15% is to be charged. Okay. So now other direct and indirect expenses is 55,460 and earned 10% profit margin on total cost. During the month of October, only 70% of production is sold within the state and applicable GST rate being 12%. Calculate the amount of CGST, SGST payable after utilizing input tax credit. So what is it we need to do in this case? First, we need to take the cost data. Okay, we need to analyze the cost. So what we need to do? First, we need to take each and every inward supply. And after taking inward supply, so you will know whether ITC available or ITC not available. So if it is available, you will put it, and thereafter you will add it into the cost. Okay. So now, what is the first inward supply that we are having here? So first inward supply here is raw material A. Raw material A purchased from a local dealer 86,100 inclusive of GST 5%. Can we take ITC on raw material A? Yes, we can take ITC. Why? Because raw material, we don't have any block credit. It is used in the course or furtherance of business. So ITC available with respect to this raw material. So 5 by 105. So raw material A, ITC available. So total is 86,100. Total is 86,100. In this, how much will be taken in cost? 8600 into 5 by 105 will be taken as ITC. 8600 into 5 divided by 105. So 4100 we will take it in ITC. And remaining portion 100 divided by 105 we will add it to the cost. Okay. So therefore that will come to 82,000 will be taken in cost. This is raw material A. Then raw material B. Raw material B from a local dealer 1,12,000 inclusive of GST at 12%. Again, raw material, no block credit used in the course or furtherance of business. We can take ITC. So 12%. So therefore total 1,12,000. In this 1,12,000, so we need to take 12 divided by 112 as ITC, and 1,12,000 into 100 by 112, you will take it into the cost. So 1,12,000 into 12 divided by 112, that is 12,000 will be ITC and 1 lakh will be taken into the cost. This is with respect to raw material B. Then purchased capital goods. What is the value of the capital goods? 1,96,000. So inclusive of GST 12%. So 12 by 112 will take as ITC. But how much we will add it to the depreciation? Only 15%. Why? Because see, capital goods we can take full ITC, but only proportionate to this production quantity we need to put it into the cost. Okay. So therefore 1,96,000 is the capital goods. So capital goods 1,96,000 total. Total is 1,96,000. How much is the ITC? 1,96,000 into 12 by 112. So the rate of GST is 12%. Na? So 12 by 112, you will take ITC. On capital goods, full ITC can be taken now itself. Okay. So 12 by 112, 1,96,000 into 12 divided by 112 will be coming to 21,000. Okay. But how much we will add it in the cost? 1,96,000 into 100 by 112 is the total cost. But in that, how much is attributable to this production? 15%. Okay. So 1,96,000 into 100 divided by 112. So total 1,75,000 is the total cost. In that, 15% is attributable to this production. That is 26,250 is the amortized cost related to capital goods. Other direct and indirect expenses 55,460, but they have not given any GST on that. Means these are non-GST supplies. So which means we don't have ITC. Entire 55,460 will be taken to the cost. Okay. So other expenses we don't have any ITC. So entire 55,650. 55,460 will be added to the cost, and thereafter on the 10% profit margin on total cost, but 70% is sold. So this will be taken as the cost of production. So cost of production is 100%. So what is the cost of production? 82,000 plus. So we need to take 82,000 plus 1 lakh plus 26,250. So 1 lakh plus 26,250 plus 55,460. So that will come to 2,63,710 will be taken as the cost of production. In this, what is the cost of goods sold? What is the cost of goods sold? 70% of the production is sold. Say this. During the month of October, only 70% production is sold within the state, and applicable GST rate being 12%. So 70% production means what? Into 70%, that is 1,84,597 is the cost of goods sold. To that only we need to add profit. Okay, add profit margin 10% of cost. 10% of cost. So means in this you take 10%, so that is 18,459.70. So then we will get the sale value. So what is the sale value here? The sale value will be 2,03,056.7. So 57 we will take, rounded off to nearest to 1 rupee. Okay. Now what is the total of the ITC? So we got the sale value. Now what is the gross liability? So gross GST payable on sales. So gross GST payable on sales 2,03,057 into, what is the rate of GST that is applicable here? 12%. So into 12%. So 2,03,057 into 12%, that will come to 24,367 is the gross liability, minus input tax credit. So what is the input tax credit? If you see 4,100, 12,000 and 21,000. Okay, 4,100, then 12,000 and 21,000. So we have 37,100. So we can use 24,367. Total we have 37,100, and we will use, so the net liability will become 0. Net GST payable will become 0. And what is the excess ITC that is carried forward? Excess ITC carried forward, we have 37,100 minus 24,367 we are adjusting. So the excess ITC carried forward is 12,733 will be the excess ITC that will be carried forward. Okay. So the taxable value of supply, actually they are asking, what is the taxable value of supply? Taxable value of supply 2,03,057. Already we got that. And what is the net GST payable? The net GST payable will be 0, and we have some excess credit that is carried forward, 6,367 and 6,367. So this is CGST, SGST. So CGST and SGST, so divided by 2, so 6,367 and 6,366.5, that is 3,637. So that we are taking. So that's how we arrived at this answer. Okay. So this is a very good question. Actually, it was a CMA exam question. I thought like maybe this type of question could be tested for CA intermediate also. So that's why I have given this question. You know, like not necessarily the same thing could come in exam. There may be a different aspect also. They will give some other invert supplies also. But the template is same. Each and every invert supply you analyze, and if ITC is available, you put it under ITC. And if ITC is not available, you take it into the cost fully. Okay. Then next one, question number 4. This question number 4 is a consolidated question, and this has inward supplies, outward supplies, everything. And based on this, we need to determine what is the net GST payable. So you will get one comprehensive question, that is for the first question, which is a compulsory question. This is of that type. Messrs. ABC and Company, a chartered accountancy firm, has its office in Bengaluru and is registered under GST in the state of Karnataka. So they are located in Karnataka. It submitted the following information for the month of April. So while analyzing itself, you need to know whether it is outward supply or inward supply and whether it is taxable under FCM or RCM. First, statutory audit services provided. So it is intrastate supply. It's an outward supply. Okay. And outward supply, statutory audit service anywhere under RCM? No. So therefore it will be taxable under FCM. Then ITR filing services provided within Karnataka. This is also outward and we don't have any exemption with respect to this. So it will also be taxable and it will come under FCM. Okay. So both are FCM. Then internal audit service provided to Mumbai client, interstate. So this is also outward. And 1,80,000 it will be taxable under FCM. So in all these cases, so GST is payable by this ABC and Company, a chartered accountancy firm. Now they have incurred the following expenses in the month of April. Means what? These are inward supplies for the purpose of providing the taxable services. Car purchased by the firm for use of senior partner of the firm for official use. So this is inward supply, and this inward supply is taxable under FCM. So means who would have paid GST? The supplier would have paid GST. Now, can the chartered accountancy firm take ITC with respect to this? No, because car is a motor vehicle. Capacity does not exceed 13. Motor vehicle for transportation of passengers, capacity does not exceed 13, and it is not covered under exception. What is the exception? Inward supply, outward supply in the same category? No. So inward supply, like that's what? Further supply, and used in the business of transportation of passengers? No. And used for imparting driving skills? No. So consequently, ITC not available. So no ITC with respect to this, blocked credit. Then office rent paid to landlord who is registered in the state of Karnataka. So it is inward supply. It is inward supply and rent paid to the landlord. It's a commercial building, na? Commercial building means it will be taxable under FCM. So therefore the landlord only will pay GST, and the GST is 450. Can it be taken as ITC? Yes, it's a business expenditure and it is not blocked credit, so we can take ITC. Professional fee paid to Mr. Rajesh, a practicing chartered accountant, for professional services availed. TDS of 20,000 is deducted under 194J, means this Rajesh is not an employee. So because if Rajesh is an employee of the CA firm, so then whatever money that is being paid to Rajesh will be coming under TDS 192. But here TDS under 194J means this particular person is not an employee of the firm, but he may be an associate of the firm. So therefore TDS is deducted under 194J, and again it is an inward supply and it will be taxable under FCM. And whatever GST paid, can it be taken as ITC? Yes, it can be taken as input tax credit, because we don't have anywhere in the block credit and it is used in the course or furtherance of business. Computers purchased for office purpose, again it is an inward. Computers will come under capital goods. Office purpose, nowhere in the block credit, used in the course or furtherance of business. So ITC is available with respect to this. Then, out of the above four supplies or service providers, landlord of office to whom rent was paid did not upload his GSTR1 within the specified time allowed under GST, resulting in GST amount not being reflected in 2B. Means this particular rent is there, na, office rent. So this cannot be taken as ITC. Why this cannot be taken as ITC? Because we have one condition that the supplier should file the GSTR1. When the supplier files the GSTR1, the data will be reflected in the recipient GSTR2B. Only then it can be taken as ITC. Only matched ITC can be taken as per section 41. Unmatched ITC cannot be taken. Consequently, even though there is no restriction under blocked credit, but we have other conditions, so there only matched ITC should be taken. In this case, it cannot be taken. Compute the net GST payable in cash, and rate of GST is 9, 9, 18 respectively, assuming that all remaining conditions of utilization of ITC are fulfilled. Here we don't have any RCM. Okay, so now usually whenever you get a question like this, you need to prepare this particular answer in a 4-statement model. Okay, so what are the 4 statements that you need to prepare? So you just see this, not necessarily that always these statements will be coming. So the first statement is statement showing GST payable, statement showing GST payable on outward supplies under FCM. on outward supplies under FCM. So that is the first statement. And the second statement is statement showing GST payable on outward supplies. So statement showing GST payable on inward supplies under RCM. So whatever inward supplies that you have on which you need to pay GST under RCM, so that should be taken in the second statement. Third statement is input tax credit. So input tax credit available for utilization. How much input tax credit that you are availing, it includes opening balance, everything, so that is set off. Remember, whatever you are paying as GST under RCM, that can be taken as ITC. So which means whatever data that come into, if it is eligible for ITC, it will come in statement 3. And statement 4 is computation of net GST payable. Computation of net GST payable. While doing the computation of net GST payable, remember what you need to do. First you need to take statement 1. So that is gross GST payable on outward supplies under FCM minus input tax credit. So what is that input tax credit? Number 3, input tax credit available for utilization. And thereafter we need to add statement showing GST payable on inward supply under RCM. That is 2 we need to take. So first is statement showing GST payable on outward supply under FCM minus input tax credit available for utilization and statement showing GST payable on inward supply under RCM. So this will be taken as the computation of net GST payable. Okay, so this is how we need to do. So accordingly, in this case, the second statement will not come. Why second statement will not come? Because we don't have any inward supplies under RCM. So if we have any inward supplies under RCM, then the second statement will come. So this is the template that you need to remember for the purpose of, because RCM liability we cannot use input tax credit, that's why. Okay, so that's why first we need to adjust input tax credit against the FCM liability, then we need to add RCM liability because we cannot use input tax credit for payment of GST under RCM. And here in this case, so first we are taking the gross GST payable under FCM. So CGST, SGST and IGST. This is the first statement. Statement showing GST payable under FCM. In that, so what is the intrastate supplies? So we have intrastate supplies, statutory audit services. So statutory audit. So in this statutory audit, what is the liability? 1,20,000. So in this 1,20,000, we have CGST, SGST, intra na. So 1,20,000 CGST 9%, SGST 9%. So 1,20,000 into 9% and 1,20,000 into 9%. So that will come to 1,20,000 into 9%. That is 10,800 CGST and 10,800 SGST. This is statutory audit service. Then ITR filing service provided within Karnataka, 1,60,000. So ITR filing services. So this ITR filing services, so how much is this? 1,60,000. So 1,60,000 into 9%. 1,60,000 into 9%. Again it will be coming under intra. So 1,60,000 into 9%. 14,400 and 14,400. Then the next one is internal audit services, that is interstate, 1,80,000. 1,80,000 internal audit services, 1,80,000 IGST, and this will be at what rate? IGST 18%, so into 18%. So 1,80,000 into 18%, that comes to 32,400. So we got the total of CGST, SGST and IGST liability. So 10,800 plus 14,400. So 10,800 plus 14,400, 25,200 CGST, 25,200 SGST and 32,400 is IGST liability. Done. Statement 1. Now we will take statement 2. What is statement 3? That is input tax credit. So what is that input tax credit? CGST, SGST and IGST. Do we have any opening balance? We need to check first. So we don't have any opening balance of ITC here. First case, no ITC. So but we need to write a note as to why ITC not available. And second case also no ITC. Again we need to write the note. So first case, why ITC not available? Block credit. Second case, why ITC not available? Even though not block credit, but the supplier has not reported the data in GSTR1. Consequently, it is not made available to the recipient in GSTR2B. So therefore, ITC cannot be availed. That's what. Then professional fee. So professional fee. The professional fee paid, ITC available 18,000 and 18,000. So again we need to write the reason as to why ITC is available. So it is not in the block credit, using the course or furtherance of business like that. Then computer purchase for office purpose 3,000. So computer again ITC available, so 3,000 and 3,000. So now this will be the CGST, SGST and IGST credit. So 18,000 plus 3,000, 21,000. So 21,000 and 21,000 and 0. Now what we need to do, CGST credit and SGST credit, we will adjust with CGST, SGST liability. So therefore the fourth statement that we have is net GST payable. So what is the net GST payable? So we have the credits which is less than the liability. So we will adjust. So 25,200 minus 21,000, that will be 4,200 CGST, 4,200 SGST and IGST will be 32,400. So this will be the liability. 4,200, 4,200 and 32,400. You got it? So like this we need to do, and whenever we are preparing like statement wise like this, we will not get confused and easily we will get the answers. So it is not that difficult question and all. So it's okay, medium range question only. Then look into question number 5. This question is on exemptions involving multiple exemptions. Miss P, a registered supplier of Rajasthan, has received the following amounts in respect of the activities undertaken by her during the month of April. Amount received for warehousing of sugarcane, 50,000 rupees. Warehousing of sugarcane. Warehousing of sugarcane. Is sugarcane agricultural produce? Yes. So, but sugar is not agricultural produce, jaggery is not agricultural produce. So, any service in relation to agricultural produce is exempted. So, therefore, this 50,000 will be exempted. Commission received as business facilitator for the service provided to the urban branch of a nationalized bank. So, it will be taxable, and we have RCM. So, service provided by business facilitator to banking company will be coming under RCM, where liability to pay GST is on the banking company. So therefore it will not be taxable in the hands of Miss P. Okay, they are asking all the transactions and all amounts are exclusive of GST are required to compute total GST payable by Miss P. So on this 50,000 no GST, on this 20,000 even though GST is there, but GST is payable by the bank under RCM. Then what if it is business correspondent? Business correspondent is FCM, only business facilitator RCM. Then amount received for service by way of labor contract for repairing a single residential unit otherwise than as a part of residential complex. So we have an exemption, that is construction of a single residential unit is exempted but not repair. So repairs of a single residential unit will be taxable. It is repairing, not construction. Whatever exemption that we have is only construction of a single residential unit otherwise than as a part of complex is exempted. But here it is repairing the single residential unit, that will be taxable under FCM. So in the hands of Miss P. And what will be the GST payable? So 10,000 into 18%. So 1,800 will be taken as the GST liability. Okay. Here they have not given whether it is intrastate or interstate. So we are assuming it as interstate because the rate given is only 18%. So that's why we are taking it as interstate and IGST is payable. Then next question number 6. This question number 6 is related to proportionate ITC. How to calculate the proportionate ITC? A garment factory receives a government order for making uniforms for a commando unit. The supply is exempt from tax under a special notification. The fabric is separately procured for the supply, but thread and lining material for the collars are the ones which are used for other taxable products of the factory. The turnover of other products of the factory and exempted uniforms is 4 crore and 1 crore. Here they have purchased some thread and lining material which is used for taxable products as well as for supply of uniforms. So these uniforms are exempted. So therefore a person is having taxable turnover and exempted turnover, and the turnover of other products and exempted. So taxable turnover is 4 crores and exempted turnover is 1 crore. The ITC on thread and lining material procured in July is 5,000 and 15,000 respectively. Calculate the eligible ITC. So what is the proportionate ITC can be taken? So we have one section 17 subsection 2, it says that if the inward supplies are commonly used for making both taxable supplies and exempted supplies, the proportionate ITC with respect to taxable supply is available. So what is the total ITC? 5,000 plus 15,000. So that is 20,000 is the total ITC into what by what? Proportionate of taxable ITC available. What is the proportionate of taxable? 4 crore is the taxable and 1 is exempted. So 4 divided by 5 ITC available. So 20,000 into 4 divided by 5, that will be 16,000 is the ITC available. First you need to write the explanation as to proportionate ITC available. Then we need to take common credit, exempted turnover, total turnover. So the proportionate ITC available will be, so first they are telling what you know, exempted, proportionate to exempted they are telling 20,000 into 1 by 5 is 4,000. So total 20, so 20 minus 4, so remaining 60,000 is the eligible ITC. So that way also we can write, or directly the eligible ITC we can take this way as the alternative answer, that is 20,000 total ITC into taxable divided by total, that is 16,000. Then question number 7. This question number 7 is computation of GST payable in case of capital goods that is sold. So under 18 subsection 6. So 18 subsection 6 says you are purchasing some capital goods. At the time of purchase of the capital goods, you have paid the GST and you availed it as ITC. Now that particular capital goods is sold or disposed of. Then what will be the GST payable? So ITC availed minus 5% for every quarter or part thereof. From when to when? From the date of purchase till the date of disposal or sale, or GST on sale value, whichever is higher should be taken. So in this case, if you see, on 25th August, Messrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including IGST from one of the supplier of Maharashtra who issued invoice on the same date. So what is the date of invoice? Purchase 25th August. And Agarwal and Agarwal put the machinery to use on the same day and availed the ITC for the eligible amount. Then Messrs. Agarwal and Agarwal use a machine in the process of manufacture of taxable goods. However, they sold this machine to Mr. Suresh Kumar of Andhra Pradesh on 20th August of next year for 7,50,000 excluding IGST. With reference to section 18.6, determine the amount payable if any by Agarwal and Agarwal at the time of sale of the machine. And the applicable rate of IGST is 18% in this case. Okay. So here what we need to do is that this 12,39,000 is the total na, including IGST, 12,39,000. And so Agarwal sold this machine to Suresh Kumar 20th August of next year for 7,50,000. So as per 18.6, first we need to take ITC availed. What is the ITC availed? 12,39,000 into rate of GST how much? 18%. So 12,39,000 into 18 divided by 118. So that will be what? 1,89,000 is the ITC availed. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, 20th August next year. So 25th August this year. So how we need to count the quarter? Calendar quarter. August will come in which quarter? August will come in July, August, September quarter. So July, August, September, then October, November, December. That is for this year. Next year again Jan, Feb, March, April, May, June, and July, August, September. So 5 quarters it will be. Date wise if you see it is 1 year only, but quarters wise if you see it will be 5 quarters. So 5 quarters into 5%, that is 25%. So what is the ITC available? 1,89,000. 1,89,000 minus 5 quarters into 5%, 25%. So minus 25% will be 1,41,750. This is A. ITC available minus 5% for every quarter or part thereof from the date of purchase till the date of sale. Or GST on sale value. What is the price at which this is sold? 7,50,000 excluding IGST. So 7,50,000 into rate of GST 18%, that is 1,35,000. So which is higher? 1,41,750 is only higher. That will be taken as the GST payable in this case. Okay. So that's how we need to calculate. This is 18 subsection 6. What if this is molds and dies, refractory bricks, jigs and fixtures sold as scrap? Then in that case, we will not do A or B, whichever is higher, just B we will take. That is sale value into GST rate. Then next one, this question number 8. Again, this question number 8 is like a consolidated question So that involves all inward supplies and outward supplies, and we need to arrive. So like a 8 marks question it will be. Mr. Prithviraj, registered under GST, is engaged in supplying services as discussed in the table below in Maharashtra. He has furnished the following information with respect to services provided or received by him during the month of February. So Carnatic music performance given by Prithviraj to promote a brand of ready-made garments, intra-state transaction 1,40,000. So whether IT is available with respect to this. So this is actually not outward inward supply, it is outward supply. Okay. So he has furnished the following information with respect to service provided. So this is what? Outward. Carnatic music performance given by Prithviraj to promote a brand of ready-made garments. Usually, so performance, artist earning money by way of performing in music, art or theatre in classical or folk is exempted if the consideration does not exceed 1,50,000. But that exemption is not applicable here because he's promoting a brand. So he's acting as a brand ambassador. Then it will be taxable and it is coming under FCM. Then outdoor catering service availed. Availed means what? Inward supply. Outdoor catering service availed means inward supply for a marketing event organized for his prospective customers intrastate. So it will be taxable and it will be taxable in the hands of the supplier under FCM. But ITC available or ITC not available, that you need to check because it's an inward supply. Wherever inward supply comes, you need to analyze about ITC. Outdoor catering is a blocked credit and it is not covered under exceptions here. We have 3 exceptions for it. Number 1, inward supply, outward supply in the same category. No. So they are using it for providing in a marketing event. So no. Inward supply part of outward supply. No. Statutory obligation incurred by employer. No. So consequently, ITC not available. ITC not available with respect to this. And then service of transportation of students provided to Subhaskar College. So again it is outward supply. So they are providing transportation service to educational institution. So to Subhaskar College, providing education as a part of curriculum for obtaining a recognized qualification. So the Subhaskar College is what type of educational institution? Category 2 educational institution. So we have some exemptions. Transportation, catering, security and housekeeping within the premises provided to category 1 educational institution is exempted. So in this case, it is provided to category 2 educational institution. Due to that reason, it will be taxable under FCM. Then next, legal services availed for official purpose. So again, it is inward, availed, inward, okay. For official purpose from an advocate located in Gujarat, interstate transaction. Now, services, legal services provided by advocate or firm of advocate to a business entity whose turnover during previous year does not exceed threshold limit is exempted. In this case, we will see what is their turnover during previous year. So we don't have anything in the first paragraph. See the notes. The turnover of Prithviraj was 2.5 crore in the preceding financial year. So 2.5 crores. What is the maximum threshold limit under GST? 40 lakhs. Here it is 2.5 crores. So definitely this advocate or individual advocate or firm of advocate services to Prithviraj, and Prithviraj is a business entity. So will be taxable and it will be taxable under RCM. So it is an inward supply, taxable under RCM. Prithviraj has to pay because advocate services and arbitrator services, wherever it is taxable, it will come under RCM. So liability to pay GST is on recipient. Can they take ITC with respect to this? Yes. It is used in the course or furtherance of business. So therefore, ITC available with respect to this. Then services provided to Wealth Bank as a business correspondent. Again, it is outward, not inward. Services provided to Wealth Bank as a business correspondent with respect to accounts of the branch of the bank located in urban area. So if it is a rural area, then it will be exempted. But urban area, business facilitator, business correspondent, agent of business facilitator, agent of business correspondent earning commission from rural area is exempted. But earning commission from urban area will be taxable. So therefore, this will be taxable. And is it FCM or RCM? Business correspondent services will be under FCM. Only business facilitator service will be under RCM. So then recovery agent service provided to a car dealer. Again, it is outward. And recovery agent services, we don't have any exemption, it will be taxable. But it will come under FCM or RCM. Recovery agent services to a bank, then only it will be RCM. But here recovery agent service is not to a bank. Recovery agent service is to a car dealer. So it will come under FCM only. It will not be RCM. Okay. Then general insurance taken on car. So invert, general insurance taken on car, seating capacity 5, used for official purpose. Generally, car is not eligible for ITC in this case because capacity does not exceed 13 and it is not covered under exceptions. So therefore, they cannot take ITC on car. As they cannot take ITC on the car, for that car, if they receive general insurance service, repair and maintenance service, authorized service station service, etc., they cannot take ITC with respect to this. So it is an inward supply, taxable under FCM. So liability GST payable by the supplier, but ITC not available with respect to this. ITC not available with respect to this. Now, all inward and outward supplies are exclusive of taxes wherever applicable. All necessary conditions for availing ITC have been fulfilled. Rate of CGST, SGST, IGST is given. Compute the net GST payable. So this, we need to do it in the statements. What is the first statement? Statement showing GST payable on outward supply under FCM. So what is the FCM liability here? Outward FCM. Outward FCM you take. So Carnatic music 1,40,000 intrastate. So you put it under 1,40,000 into 9%. So 12,600, 12,600. Okay. Then next is the next outward FCM, transportation of students 1 lakh intrastate. So 1 lakh into 9%, 9%, that is 9,000, 9,000. And next, what is the next outward? The next outward is 5, and that is also FCM. So 2 lakhs intrastate. So CGST, SGST. So 2 lakhs into 9%, 18,000 and 18,000. Okay. What is the next outward? So sixth one, recovery agent service. That is also FCM. So recovery agent services to car dealer intrastate only. So 15,000 into 9%, 1,350, 1,350. So this is the statement 1 total. What is that? Gross GST payable under FCM. 40,950, 40,950. Over. Then statement 2. Statement 2 is what? Inward supply under RCM. So what is the inward supply here? Second one. But it is not under RCM. Then 4. Inward supply under RCM. Advocate services. 1,75,000. Interstate. So IGST. 1,75,000 into 18%. So 31,500 will be IGST liability. Okay. RCM. And any inward other than this, last is there, but that is FCM. So only one inward we have, under RCM. Statement 2, that is 31,500. Okay. Next, we need to take statement 3, input tax credit. Remember, whatever GST we paid under RCM, we can take it as ITC. So this 31,500 will come under ITC. You understood? This 31,500 has 2 adjustments. First, we need to take it under RCM liability. Even we need to put it under ITC also. And thereafter, any inward supply on which ITC available, outdoor catering services available for marketing, ITC not available, so don't take. Legal service we counted. General insurance ITC not available. So only one ITC that is available is 31,500. Now statement 4, computation of net GST payable. What is the gross GST payable under FCM? So gross GST under FCM 4950, 4950. Can we adjust 31,500? Yes. So we can use equally. So 40,950, 31,500 divided by 2, that is 15,750, 15,750, we can adjust under FCM liability. So then we have to add GST under RCM, 31,500. So therefore 25,200 and 25,200 and 31,500 is taken as the net GST payable in cash. So IGST credit, we cannot use it for the RCM liability. We have to adjust with FCM liability. So IGST credit, we adjusted with FCM liability. Thereafter, we added RCM liability. So this is how we need to do. Okay. Again, this question is a comprehensive question. 4 statements we did and we arrived at the answer. Then question number 9. This question is related to valuation, value of supply. Section 15. From the following information, determine the value of taxable supply as per provisions of section 15 of CGST Act. Value of machine including GST at 12% is 15 lakhs. So 15 lakhs is the value of the machine. The invoice value includes the following: taxes other than CGST, SGST and IGST charged separately by the supplier 15,000 rupees. So first we need to take transaction value. What will be the transaction value? This 15 lakhs will be taken as the transaction value. Then the invoice includes the following. So these 5 are included in the invoice. So wherever it is to be included, it is already included, ignore. Wherever it is to be included. So 4 points you need to keep. Number 1, an amount is to be included. In the given price, it is already included, ignore. An amount is to be included. In the given price, it is not included, add. An amount is to be included. Okay, so it is not included in the given price, you need to add. An amount is to be excluded, it is already excluded, ignore. An amount is to be excluded, but it is included in the given price, then deduct. So these are the 4 points you need to keep in mind. Here, taxes. Taxes as per 15(2)(a), as per 15(2)(a), taxes other than GST should be included in the value other than GST. But in the given price, it is already included, so therefore you ignore. Okay, then. But GST we need to take out, so that we will do later. So because we need to remember one important assumption, when the price is given as inclusive of GST, all these amounts also assumed to be inclusive of GST. First you need to make all these adjustments, finally you arrive at some value, that value will be inclusive of GST and we need to calculate GST on an inclusive basis. Okay. Then weightment and loading charges. So weightment and loading charges 25,000. So as per 15(2)(c), as per 15(2)(c), weightment and loading charges to be included in the value. Why? Because it is any expenditure when the loading will happen before delivery. So any expenditure incurred by the supplier to recipient and charged before delivery of the goods should be included in the value. Due to that reason, it should be included. In the given price, it is not included. Therefore, it is already included. So therefore, we will ignore it. Then consultancy charges in relation to pre-installation planning. Again, this will be coming under before delivery, and in the given price it is already included. As per 15(2)(c), it is an expenditure incurred by the supplier and charged to recipient before delivery of the goods. It is to be included. In the given price, it is already included, so ignore. Testing charges. Testing charges as per 15 subsection 2 clause C, this testing charges is an expenditure incurred by the supplier and charged to recipient before delivery of the goods. It is to be included. In the given price already included, so ignore. Inspection charges also same. When inspection is done before delivery, so it is to be included. In the given price, it is already included, so ignore. So these are the notes you need to write. You need to write the notes, but you don't have to do any adjustment to the transaction value. So like this, each and every note, first point and whatever is the explanation, like that. So for 2, 3, 4 and 5, it is common 15(2)(c). So one explanation will be sufficient. Thereafter, other information. Other information, subsidy received from central government for setting up factory in backward region. So is it? So subsidy is divided into 2. Directly linked to the price, not directly linked to the price. Not directly linked to the price, ignore it. It will not be taken into for valuation. Whereas directly linked to the price, again divide it into 2. From CGRSG, then not to be included. From others, to be included. So in this case, subsidy, is it directly linked to the price? No, it is not related to outward supply. What is called as directly linked to the price? Whenever we receive the subsidy related to our outward supply, then it is directly linked to the price. In this case, it is not directly linked to the price because it is for setting up a factory in the backward region. Means we need to ignore this subsidy. We don't have to take this. Subsidy received from a third party for timely supply of machine to the recipient. So this subsidy is from a third party for timely supply of the machine. Means it is related to outward supply, means directly into the price. But is it from CGRSG or from others? From others. So therefore it is to be included in the value. Okay. And in the given price, it is excluded because it is other information. So therefore we need to add. So this 50,000 rupees we need to add. Okay, 50,000 we need to add. Then trade discount actually shown separately where necessary. Trade discount is given before or at the time of supply. So discount given before at the time of supply, duly recorded in the invoice, is allowed as a reduction. So therefore this 24,000 is allowed as a reduction. 24,000 we need to reduce. Okay, now see the value that you get. 15 lakhs plus 50,000 minus 24,000, that will be 15,26,000 will be taken. On that 15,26,000, see is the value inclusive of GST 12%. So therefore we need to make all the adjustments. Finally we get the value 15,26,000, that is assumed to be inclusive of GST. So into 12 divided by 112, that will be 1,63,500. That's where we get the value of supply. Like this we need to calculate. Okay. So every attempt they will be asking one question on value of supply, but in this question, so good number of adjustments are there. This can also be tested. Then the next question, this question is also on value of supply, but little advanced question. It involves some cash discount and discount recovered, etc. and all. Lakshmi Limited of Bhopal, Madhya Pradesh is a supplier of machinery. Lakshmi Limited has supplied machinery to PQR Enterprises in Indore, Madhya Pradesh. So supplier is located in Madhya Pradesh, recipient is also located in Madhya Pradesh. It's an intra-state supply on 1st October. The invoice for supply has been issued on 1st October, thus the time of supply of the machinery is 1st October. Lakshmi Limited and PQR Enterprises are not related. Following information is provided. Basic price of the machinery excluding all taxes, but including design and engineering charges of 10,000 and 20,000 is 20 lakhs. So this 20 lakhs we will take as the transaction value. And this 10,000 and 20,000 are design and engineering charges and loading charges. When is this charges incurred? Before delivery of the goods, before delivery of the machinery. Therefore it is to be included in the value, and in the given price it is already included, so therefore ignore it. Lakshmi Limited provides 2-year free warranty for the machinery. Lakshmi Limited also provides an extended 1-year warranty on payment of additional charges of 1 lakh. PQR Enterprises opted for 1-year warranty. So there is some additional warranty charges. How much is the additional warranty charges? 1 lakh. And PQR Enterprises opted for 1-year warranty. So therefore this particular warranty is an expenditure incurred by the supplier and charged to the recipient before delivery. So opted for warranty at the time of delivery itself, before delivery itself. Therefore it is to be included in the value, and in the given price of 20 lakhs it is not included, so therefore we need to add. Then Lakshmi Limited has collected consultancy charges in relation to pre-installation planning. So pre-installation planning, when is it? Before delivery. So as per 15(2)(c), so it is to be included in the value, in the given price not included, so add. Freight and insurance charges from place of removal to buyer's premises. So they have incurred some transportation cost, and as per the contract they need to deliver the goods to the buyer's place. So therefore this particular freight and insurance is before delivery of the goods and charged by the supplier to recipient, so it should be included in the value. In the given price it is not included, so we need to add. Lakshmi Limited received a subsidy of 50,000 from central government for supplying the machinery to backward region, since the receiver was located in backward region. So is it directly linked to supply? Yes, because the subsidy is based on outward supply, so this subsidy is directly linked to price. And is it from CGST or others? CG or SG. Therefore it is to be excluded. But we don't know whether the given price is after considering the subsidy or not. So there are two views. The given price of 20 lakhs can be assumed to be after considering subsidy, or the given price of 20 lakhs may be assumed to be before considering subsidy. After considering subsidy means what? While arriving at this 20 lakhs, the subsidy is already reduced. Without considering subsidy means while arriving at this 20 lakhs, they have not reduced the subsidy. Now, so this 50,000 rupees, we are assuming that the given price is after considering the subsidy. That's the usual assumption that we need to take. The usual assumption that we need to take while doing the solution for CA exam questions is that the given price is after assuming the, assuming that is the assumption is that the given price is after considering subsidy. So therefore it is to be included or excluded, it is to be excluded. And in the given price it is already excluded, so ignore. Then Lakshmi Limited also received 50,000 from a joint venture partner of PQR Enterprises for making timely supply of the machinery to the recipient. This is subsidy from whom? Subsidy from other than CG or SG, directly linked to the price. It is to be included. And we took the assumption that the given price is after considering subsidy, means both these 50,000 should have been reduced to arrive at 20 lakhs. First 50,000 not to be included, it is to be excluded. In the given price it is already excluded. but the second 50,000 is to be included, but in the given price it is excluded. So we need to add this 50,000. A cash discount of 1% on the basic price of the machinery is offered at the time of supply if PQR Enterprises agree to make the payment within 30 days of receipt of the machinery. Usually this cash discount will be given after supply, but in this case the cash discount is given before or at the time of supply, and they put a condition that the payment should be made within 30 days, which means it's a pre-supply discount and it is allowed as deduction. A cash discount of 1% on basic price of the machinery is offered at the time. So it's a pre-supply discount allowed as deduction now itself. Then, however, what happened here, discount at 1% was given to PQR Enterprises as it agreed to make the payment within 30 days. That's why we are deducting. The machinery attracts CGST, SGST and compute the CGST, SGST payable on the machinery. So what will be taken as a value? 20 lakhs plus 1 lakh plus 10,000 plus 20,000 plus 50,000 minus 1% on basic price. What is the basic price? 20 lakhs. 20 lakhs into 1% is 20,000. So minus 20,000. See here. 20 lakhs, 1 lakh, 10,000, 20,000, 50,000 minus 20,000. 21 lakh 60,000. And supplier in Madhya Pradesh and buyer also in Madhya Pradesh. So it's an intra-state supply chargeable to CGST and SGST. Okay. And the discount is pre-supply discount before the time of supply. That's why we have deducted. There is another way also here. Slight change in the answer could be possible. Sir, this 20 lakhs is after adding 10,000 and 20,000. But the basic price is given. So the basic price can also be taken as 19 lakh 70,000. How? After reducing this 10,000 and 20,000, 19 lakh 70,000 also can be taken. So that's what the note I have given. So the basic price of the machinery can be taken as 19 lakh 70, and accordingly the discount can be taken as 19,700. So that alternative is also possible. That way also we can do. But in the in exam you just follow this only. That is better. But suppose if you follow this way also, you will get the marks. Okay. Then next question number 11. Question number 11 is related to composite supply, mixed supply. What will be taken as the relevant GST rate, etc. So see this question. Mrs. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. Supply of a laptop bag along with laptop to a customer of Mumbai for 55,000 exclusive of GST. So laptop and laptop bag. The rate of GST on laptop is 18, laptop bag is 28%. Both are taxable. When there will be composite supply, 2 or more supplies. Here there are 2 or more supplies involved in a single transaction. Both are taxable, naturally bundled. Why? Usually laptop and laptop bag are naturally bundled in the ordinary course of business. So most probable side you need to see. Sometimes we may get the laptop without laptop bag, but generally if you see laptop with laptop bag, so therefore it is naturally bundled. And what is the principal supply? Laptop. So for laptop, what is the rate of GST? 18%. So that will be taken on the entire amount. So 55,000 into 18%. So that will be 9,900 will be taken. And why is it IGST? Simple. Supplier is located in Rajasthan. They are making supply to a buyer in Mumbai. Therefore it is interstate supply chargeable to IGST. Understood? Then next, second. Supply of 10,000 kits at 50 each, amounting to 5 lakhs, exclusive of GST, to Ram Fancy Store in Kota, Rajasthan. Each kit consists of 1 hair oil, 1 beauty soap, and 1 hair comb. So in this case, hair oil, beauty soap, and hair comb, hair oil, beauty soap, and hair comb, all these 3 are taxable, but this is not naturally bundled. So therefore, it will not come under composite supply. And is it for a single price? Yes, it is for a single price. Therefore, it will come under mixed supply. So what will be taken? Highest rate will be taken. Between hair oil, beauty soap and hair comb, what is the highest rate? 28%. So the 28% will be taken on this 5 lakhs. So 5 lakhs into 28%. So that will be taken. And there is one interest related information here. So but 5 lakhs into 28%. And where is it? Supplier Rajasthan and recipient also Rajasthan. Therefore, it is intra-state supply. Now, related to this, there is one point. Have a look into this. Interest. There is one interest point. Interest of 6,400 inclusive of GST was collected by Kajal in January from Ram Fancy Store quota for payment received with a delay of 30 days. So as per section 15 subsection 2 clause D, any interest, late fee or penalty for delay in receipt of consideration should be included in the value. In the given price, so this 5 lakhs, this interest needs to be included. But this 5 lakhs is exclusive of GST, but this 6,400 is inclusive of GST. So what is the rate of GST on this 5 lakhs? The rate of GST is 28%, which means on the 6,400 also, the rate of GST will be 28%. Why? Whenever interest is taxable, interest on account of delay in receipt of consideration, whenever interest is taxable, it will derive the rate of the original supply. So this interest is because of non-payment of 5 lakhs. That 5 lakhs is taxable at what rate? 28%. Therefore, this interest also will be taxable at 28%. So this 6,400 into 100 divided by 128. So that is 5,000. So we need to take the value as 5 lakh 5,000. Why 5 lakh 5,000? 5 lakhs plus the interest. So 5 lakh 5,000 will be taken as a value. And it is a intra-state supply. Because that Ram Fancy Store is located in Rajasthan and Kajal is also located in Rajasthan. So therefore it's an intra-state supply chargeable to CGST, SGST. And 28% means 14% CGST, 14% SGST. Okay. Then number 3, third transaction. 100 kits are given as free gift to Jaipur customers on the occasion of Mrs. Kajal's birthday. Each kit consists of 1 hair oil, 1 beauty soap. Cost of each kit is 35. But open market value of such kit of like kind and quality not available. Input tax credit has not been taken on the goods contained in the kit. Now, all this information, why they have given? First, point number 1. Is it supply or not? You need to check. So, is it for consideration or without consideration? Without consideration. When the activity is without consideration, we need to refer to 7.1c. In 7.1c, there are 4 activities. D, R, I, P. D for disposal of business asset on which ITC avail. R for related party transaction including transaction between distinct person. I for import of service from a related person another establishment located outside India. P for principal agent transaction. First, is it disposal of business asset? Yes. On which ITC avail? No. So it will not come there. Is it related party transaction? No. Principal agent transaction? No. Consequently, this activity is not a supply and GST shall not be payable. Got it? Then, next one. Event management services provided free of cost to her brother for his son's marriage function in Indore. Cost of providing such service is 80, but the open market value of such service and service of like kind and quality not available. Now, in case of brother, it's a related party transaction. So, is brother dependent or not? So, nothing given means not dependent. If it is dependent, it will be given in the question. If nothing is given, not dependent. So not dependent means, so he is not a relative, brother is not a relative. So this is not a related party transaction. Again, it is not a supply. So again, it is not a supply because it is not a related party transaction. Because it is without consideration. Without consideration, you need to refer to 7.1c. Then number 5, 1,400 chairs and 100 coolers hired out to Function Garden, Ajmer, Rajasthan for 3,30,000 exclusive of GST. Including cost of transporting the chairs and coolers from Mrs. Kajal's Godown at Jaipur to Function Garden, Ajmer. So in this case, there are 2 activities, renting of chairs and coolers and transportation. Mrs. Kajal has paid the cost of transportation of chairs and coolers to an unregistered GTA at 20 rupees for each chair and cooler. In turn, charge 20 rupees only for each chair and cooler from Function Garden. So, but the transportation service is taxable at 5%. So, therefore, in this case, what we need to do, renting of chairs and coolers 12% and transportation 5%, both are taxable. Naturally bundled in the ordinary course of business, yes. Usually, when we take the chairs and coolers on rental basis, they will only bring it, they will put it, and once the function is over, they will pack it and take. So, transportation is generally they will do because this is their asset and they need to protect their asset. So, then it will be coming under naturally bundled in the ordinary course of business. And what is the principal supply? Hiring of chairs and coolers. So therefore, what is the rate of GST for hiring of chairs and coolers? Hiring of chairs or coolers is taxable at the rate of 12%. So therefore, entire amount will be taxable at 12%, the entire 3,30,000. And Function Garden Rajasthan means intra-state supply. So 3,30,000 into CGST, SGST. So 3,30,000 into 6%, 19,800, 19,800. That is with respect to this. And she has paid the GST under RCM because the GTA is unregistered. Unregistered GTA. Unregistered GTA means GTA service will come under RCM, where liability to pay GST is on the recipient at 5%. So therefore, what is the GST payable? So how many chairs and coolers? 1400 chairs and 100 coolers. So 1400 plus 100, 1500. And how much is the charges? 20 rupees. So 1500 into 20, that will be 30,000 rupees. So that 30,000 rupees into CGST, SGST, 2.5%, 2.5%. So 750, 750. So this will be the total GST liability. So CGST, SGST and IGST, this will be taken as the total GST that is payable. That is with respect to this question. Okay. So this is question number 11, composite supply and mixed supply. Then question number 12. From the following information, determine the person liable to pay GST. So both supplier and recipient are located in India. This is related to RCM. So who is liable to pay GST? So whenever you are writing this, you need to give reference to section 9 subsection 3 read with notification number 13 of 2017. Look into the first one. Mr. Atul is an agent of life insurance company. The insurance company pays commission of 6 lakhs to him. Atul claims that no GST is leviable on service provided by him as his value of taxable service does not exceed 20 lakhs. So in this case of life insurance agent providing services, so the insurance company and gets a commission, the insurance company will pay GST. So here, who is having liability to pay GST? The liability to pay GST is on the life insurance company, not on Mr. Atul. Then XYZ Limited avails service of Vimal Goods Transport Agency for transportation of goods by road from factory located in New Delhi to its Jaipur depot and paid freight of 1 lakh. If Goods Transport Agency not opted to pay GST under forward charge, then XYZ Limited shall pay GST under RCM at 5%. Okay. So if GT opts to pay tax, then they will pay GST. And suppose if GT are not opt to pay GST, then the recipient XYZ Limited shall pay. Then next number 3. Ranka Jewellers Limited paid 50 lakhs for sponsorship of Miss India beauty pageant for sponsorship services. Usually sponsorship of recognized sporting event is exempted, but this is not a recognized sporting event, so due to that reason it will be taxable. And in case of sponsorship services, who is making the payment? Ranka Jewellers Limited is making the payment, and Ranka Jewellers Limited is the recipient. The one who is organizing the event is a supplier, the one who makes the payment is the recipient. As the recipient is body corporate or firm, it will be coming under RCM. Suppose if the recipient is other than body corporate or firm, then it will come under FCM. But here the recipient is body corporate, so Ranka Jewellers shall pay GST under RCM. Then next number 4, legal service provided by VHB and Company, a partnership firm of New Delhi, to Tata Motors Limited, Mumbai. So in this case, legal services provided by a partnership firm to Tata Motors Limited. So the Tata Motors Limited turnover during the previous year definitely exceed threshold limit. So therefore it will be taxable, and liability to pay GST. Remember, wherever advocate service and arbitrator service is taxable, it will come under RCM. So the liability to pay GST is on Tata Motors Limited under RCM. So on this 70 lakhs, GST is payable by Tata Motors under RCM. Then number 5, service provided by a director of a company not in the capacity of employee to the company 10 lakhs. So director providing services to a company will be coming under RCM. So he is not an employee. What if director is an employee? When director is employee, then it will not be coming under taxability first of all, because if director is an employee, that will be excluded from supply. Services provided by employee to employer in the course of employment is excluded from supply. Otherwise, it will be covered under supply. And whenever director gets some money from the company, the liability to pay GST is on the company or body corporate under RCM. So in this case, the company has to pay GST. So for 5th one, liability to pay GST is on company or body corporate. Then number 6, infrastructural support services provided by government to business entity. Infrastructural support services we don't have anywhere in the exemption. And in case of services provided by government to business entity, liability to pay GST is on the business entity under RCM. So therefore, business entity will pay. But in case of renting of immobile property given to business entity, if the business entity is unregistered, government only will pay GST under FCM. If the business entity is registered, it will be coming under RCM. Whereas here, infrastructural support services provided by government to business entities other than renting of immobile property, so it will be RCM. The business entity only will pay GST. Okay, so the GST is payable by the business entity. Number 7, renting of immobile property services provided by government to business entity 18 lakhs. Now in this case, renting of immobile property to business entity, is the business entity registered or not, we don't have. If the business entity is registered, it will be RCM. If the business entity is unregistered, then government will pay GST under FCM. Okay. So this is about the question on RCM versus FCM. Now question number 13. Question number 13 is related to interest computation under QRMP scheme, quarterly return monthly payment. In QRMP scheme, there are two methods of payment of tax on first month and second month involved in the quarter, that is fixed sum method and self-assessment method. In case of fixed sum method, whatever is the amount that they need to pay is 35% of the liability of the previous quarter if they have filed quarterly 3B of the previous quarter. If they have filed monthly 3B of the previous quarter, then they need to take 100% of the previous month GSTR 3B liability. Okay, so this is under fixed sum method. Self-assessment method, they need to compute how much is the GST payable that they need to pay. Suppose if the actual liability is more than the fixed sum method liability, that differential amount, no interest payable. If the differential amount is paid by, so 22nd or 24th of the month following the quarter, that is the due date of filing GSTR 3B for the quarter, 22nd or 24th of the month following every quarter. Suppose if it is SAM, self-assessment method, they have paid some tax, but the actual liability is more than self-assessed tax, then in that case on the differential amount, interest will be payable even if the differential amount is paid by GSTR 3B due date, that is 22nd or 24th of the month following every quarter. Now see this question. Arpit has opted for QRMP for the quarter 1, April to June of financial year 21-22, and its total liability for the said quarter was 1 lakh. Okay. Now Arpit continues under QRMP for quarter 1, July 21 to September 21, and gives the following data. Self-assessed tax liability is 40,000, that is paid on 31/8 for which month? July month. Now first for July month, what is the due date? 25th of August. So but they are making payment on 31st of August. For first month and second month in the quarter, the GST will be payable by 25th of the month following that month. For July, it is 25th August. For August, it is 25th of September. So for July, it is 25th August. But when are they making the payment? 31st August. Now, for this 6 days delay, there will be interest on 40,000. So therefore 6 days, how 6 days? 25th August, but they are making payment on 31st August. So there is a delay by 6 days. So we need to take 40,000 into 18%. This 40,000 is the tax. Into 18% is the rate of interest. Into 6 divided by 365. So therefore 118.35, 118 rupees is the interest. Then August 21, self-assessed tax liability of 10,000 paid on 10/10. For August, what is the time limit for paying this? For August month, it is 25th of September. But when are they making payment? 10th October. Means in September 5 days, October 10 days. For 15 days, interest will be payable on 10,000. So 10,000 into 18% into 15 by 365, 74 rupees will be taken as the interest. Then September 21, self-assessed tax liability, cash liability is 70,000 paid on 11/11/2021. Now for the quarter July to September, what is the due date? For the quarter July to September, July, August, September, the due date is 25th of, like 22nd or 24th of October. So but here we are taking, so as GSTR 3B, but in exam it will be given, don't worry. GSTR 3B due date is 22nd of October. So for the states GMCA, Gujarat, Madhya Pradesh and Chhattisgarh and Andhra Pradesh, and states below that it will be 22nd of the month following every quarter. For the states above that, it will be 24th of the month following every quarter. So the state will be given in the question. Assume here that Arpit is located in Karnataka. So that's the reason why it will be 22nd October. So by 22nd October, they need to make the payment of this 70,000. But when is it made? 11 November. So in October, 31 minus 22. So 9 days delay in October, and in November 11 days. So total 20 days. So 11 plus 9, 20 days. So 22nd October to 31st October. 31st October minus 22nd, so 9 days. Then 11 days in November. So 20 days. For 20 days, we need to compute interest on 70,000. So 70,000 into 18% into 20 divided by 365, that is 690.41. 690 rupees will be payable as the interest. So this is the interest payable for delay in payment of the liability. Okay. Now, this is case A. Interest is self-assessment method of payment opted for month 1 and month 2 of the quarter, second quarter. Suppose if they are opting for fixed sum method of payment for month 1 and month 2, then what will happen? If they have opted for fixed sum method, then they cannot pay 40,000 and 10,000. What is their liability? The total liability is 40 plus 10 plus 70. The total liability will be like 1,20,000. 1,20,000 is their liability. So 40 plus 10, 50 plus 70, 1,20,000 is their liability. Okay. Now, what they need to do in the fixed sum method? They need to take the previous quarter liability. So what is the previous quarter liability? 1 lakh into 35%. What is 35% of 1 lakh? 35,000. So 35,000 they need to pay for the month of July and August. For the month of July and for the month of August, they need to pay 35,000, 35,000. And for the month of September, how much they need to pay? The difference. What is the balance? Total 1,20,000, darling. 1,20,000 minus 35,000 minus 35,000, that is 50,000 they need to pay for September. Okay. So now you understood the liability. For July, 35,000. For August, 35,000. For September, 50. How they got 50? Simple. 1,20,000 total liability minus 70,000 which is already paid. So that is how they got 50,000. Now, first month, when the payment is made, 31st August, same number of days delay, 6 days delay, but it should be computed on 35,000. So the number of days delay is same, 6 days, 15 days, 20 days, 6 days, 15 days, 20 days. But on what it will be computed? On the tax. So here the tax is 35,000, here the tax is 35,000, here the tax is 50,000. Accordingly, we will get the interest. So 35,000 into 18% into 6 by 365, 15 by 365, 50,000 into 18% into 20 by 365. This is how the interest will be computed if it is fixed sum method. Now, case C. Interest, if fixed sum method of payment is opted for month 1. So can we go for fixed sum method for 1 month and self-assessment for another month? Yes. So if fixed sum method of payment is opted for month 1 and self-assessment method of payment is opted for month 2, then what will happen? For month 1, they will pay 35,000. Why? Fixed sum will always be previous quarter liability into 35%. So previous quarter liability 1 lakh. 1 lakh into 35%, 35,000. For month 1, it is 35,000. For month 2, it will be, self-assessment. How much they are paying? 10,000. For month 1, 35,000. For month 2, 10,000. What is the total liability? 1,20,000. 1,20,000 minus 35 and 10, so 45. 1,20,000 minus 35 minus 10, 75,000 they will pay for month 3. Now for month 1, so interest will be 6 days on 35,000. Month 2 interest will be for 15 days on 10,000. Month 3 interest will be on 75,000 for 20 days. So this is how they may test a question on interest computation under QRMP scheme. So that's why I just created this question and I gave you any situation, any case may be tested in exam. Then question number 14, this is again related to exemptions, like a consolidated question, comprehensive question that covers inward supplies and outward supplies. PayHalal has obtained registration because many students have requested me, sir, this comprehensive questions we are not comfortable in writing in exam. So that's the reason why I have included more of comprehensive questions here. PayHalal has obtained registration in the current financial year in Uttar Pradesh. His turnover in the preceding financial year was 19,90,000. He has received the following amounts in respect of activities undertaken by him in the month of September. Funeral service. So this is outward supply. Funeral service, this is outward. And funeral, burial, crematorium, mortuary, including transportation of deceased, is not a supply. So no need to pay GST on that. Okay. Then number 2. Again, number 2 is also outward services of warehousing of fruits and vegetables. Fruits and vegetables are agricultural produce, and any service in relation to agricultural produce is exempted. So therefore this 50,000 is exempted, and PayHalal is not required to pay GST on that. Electrically operated bus given on hire to municipal corporation. So hiring of motor vehicle that can carry more than 12 passengers. Hiring of which motor vehicle? Electric motor vehicle that can carry more than 12 passengers to a local authority is exempted. Here it is given as bus. Bus means definitely the capacity will be more than 12, and it is given on rent to municipal corporation. So due to that reason, this will be again exempted. So PayHalal is not required to pay GST on that. It's an outward supply. Then service provided to recognized sports body as commentator. We have some exemptions with respect to services provided to recognized sports body. Services provided by an individual as a referee, player, referee, umpire, coach, team manager, 5 people. Services provided by individual as a player, referee, umpire, coach, team manager to recognize sports body is exempted, but commentator is not in the list. So which means this will be taxable. This is again outward, and this will be taxable, and it will be taxable under FCM in the hands of PayHalal. Then commission received as an insurance agent from insurance company. So outward, and this outward will be taxable under RCM. In whose hands? In the hands of the insurance company, because we have insurance agent services to insurance company covered under RCM, where liability to pay GST is an insurance company. So PayHalal will not pay, the insurance company will pay under RCM. Commission received as business facilitator, again it is outward, and business facilitator for service provided to the urban branch. Business facilitator service to urban branch is taxable. Business facilitator to rural branch is only exempted. Here urban branch, it will be taxable. And who will pay GST? Business facilitator na. So it will come under RCM, where liability to pay GST is on the recipient. So it will not be taxable in the hands of PayHalal. Then security services, supply of security personnel provided to Damodar Engineering College for the security of the college premises. So security service, security agency service we have under RCM. What are the conditions? 2 conditions. Supplier should be other than body corporate. Yes. PayHalal is other than body corporate. And the recipient should be registered. Yes, recipient is registered under GST. Consequently, it will be taxable under RCM in the hands of that engineering college, but not in the hands of PayHalal. Again, it is an outward. So only one outward supply that is taxable in his hands is this. So service provided to recognize sports body as commentator. Everything else will be either exempted or it will be taxable under RCM. So recipient will pay GST on this. Then further, he has received the following services in the month of September. Received means what? Inward supplies. Received means inward supplies. So freight paid to GTA, unregistered GTA means they are going to pay GST under RCM for the business activities relating to serial number 1 above. So it will be taxable, and it is taxable under RCM. Why? GTA services, so FCM or RCM they have an option, but GTA if you see they are unregistered, definitely they cannot go for FCM option. Consequently, the recipient is liable to pay GST under RCM, but they cannot take ITC. Why they cannot take ITC? This GTA services is used in relation to serial number 1. What is serial number 1? Funeral service. Funeral service means what? So that is not chargeable to GST, not a supply. Then how can they take ITC? So ITC not available. ITC not available. Okay. Then legal advice from Messrs. Kanun Associates, a partnership firm seeking advice in relation to tax dispute of the business. So services provided by individual advocate or firm of advocate to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. Here, Halal is a business entity and turnover during the previous year was 19,90,000. So it does not exceed the threshold limit. Consequently, this activity is exempted. So this inward supply is exempted, GST not payable. All the transactions stated above are intrastate transaction and amount given are exclusive of GST wherever applicable. You are required to calculate the net GST payable. First we will see gross statement 1. Gross GST under FCM, only one. That is 2 lakhs. That too, so this will be taken as all the transactions are intrastate. So CGST, SGST. So 2 lakhs into 9%. So that is 18,000, 18,000. This is the FCM liability. Gross GST payable under FCM. Then statement 2. Inward supply under RCM. This 1 lakh. So 1 lakh into GTA is 5%. So into 2.5%. 2,500, 2,500. This is inward supply under RCM statement 2. Now statement 3, input tax credit. Input tax credit, they have only 2 inward supplies. So in that one inward supply, no GST. Another inward supply they pay, but they cannot take ITC. So inward supply is 0. Okay. Now statement 4, net GST payable. What is the gross GST under FCM? 1818 and GST under RCM 2525. So therefore 20,500 and 20,500 will be taken as a liability. Why this 2,500 cannot be taken as ITC? Already we discussed this is used for funeral service. So that's why ITC is not available with respect to this. But we need to pay GST on the GTA services. Okay. So this, again, it's a comprehensive question only. Then question number 15. Question number 15 is related to cancellation of registration. An interesting question, see this. Mr. X of Haryana intends to start business of supplying of building material to various construction sites in Haryana. He has taken voluntary registration under GST in the month of April. However, he has not commenced a business till December due to lack of working capital. So he's not having money, so he did not commence a business. When he took the registration April, that to voluntary registration, and till December, so he did not commence a business. So how many months? April, May, June, July, August, September, October, November, December, like 9 months. The proper officer suo motu cancel the registration. Can the registration be cancelled? Yes. This is one of the reason for cancellation of registration. If you have obtained voluntary registration and not commenced business within 6 months, then your registration can be cancelled. So this is one of the reason for cancellation of registration as per section 29. Now, the proper officer suo motu cancel the registration. You are required to examine whether the action taken by proper officer is valid in law. So now you need to write down what are the situations that leads to cancellation of registration. Total how many situations we have? 8 situations. Number 1, so if there is any transfer or discontinuance of business. Number 2, so the person, there is a change in constitution of business. Number 3, no longer liable to be registered. Number 4, so registration obtained by fraud or misrepresentation of facts. Or number 5, contravention of the provisions of act or rules thereunder. Then so they have voluntary obtained registration but not commenced business within 6 months. Then 2 points related to returns. They are under composition scheme and they did not file annual return within 3 months after its due date. And number 4, like last 8, they are under normal scheme and they did not file consecutive 6 months or 2 quarters returns. So in that case, their registration will be cancelled. In this case, they have not commenced business within 6 months from the date when they have obtained registration. Consequently, their registration can be cancelled by the proper officer. Now see the second part. Mr. X has applied for revocation of cancellation of registration after 30 days from the date of service of order of cancellation. Usually, whenever proper officer initiate cancellation of registration, they will pass an order for cancellation. But thereafter, we can make a request for revocation of cancellation. What is the time limit within which we need to make request for revocation? 30 days from the cancellation order, which can be extended for a further period of 30 days by an additional or joint commissioner, and further period of 30 days by commissioner. So this 90 days is the maximum window. So in this case 40 days. Okay. Department contends that application for revocation can only be made within 30 days. However, X contends that period of submission may be extended on sufficient grounds being shown. You are required to comment. Yes, on sufficient grounds being shown, it can be extended. So due to that reason, here this 30 days can be extended, so beyond, but the permission should be given by additional commissioner or joint commissioner. So additional or joint commissioner will be giving this permission. So in this case, on sufficient cause being shown, additional joint commissioner can extend and the revocation application can be made in this case. That is with respect to question number 15. This is on registration chapter. Then question number 16 is on exemptions. In this exemptions, we have an exemption related to resident welfare association. That is, there is an unincorporated association or body which is called as a resident welfare association. That is a group of flat owners will form an association in order to incur the common area expenses, and they will recover it from each and every flat owner in the form of maintenance charges. That maintenance charges will be exempted if per month maintenance charges does not exceed 7,500. If per month maintenance charges exceed 7,500, then entirely it will be taxable. Okay. Now see here, monthly subscription collected from member families 8,500 each from 100 families. So it exceeds 7,500. When it exceeds 7,500, so therefore this 8,50,000 will be taxable and we need to pay GST on that. Electricity charges levied by the State Electricity Board on the members of Resident Welfare Association. So, and the same was collected from the members and remitted to the board on behalf of the members. So the invoice is raised by electricity bill is raised on the members of that Resident Welfare Association. Resident Welfare Association has just paid and recovered, so this activity is exempted because transmission and distribution of electricity is exempted. So due to that reason, there won't be any GST on this 3,50,000. What if the invoice is raised on Resident Welfare Association and they in turn collected from the members by apportioning that? Now it will not be called as electricity, it will be called as recovery of expenses. So by apportionment, which is part and parcel of their service. So that is 4 lakhs. Electricity charges levied by State Electricity Board on the Resident Welfare Association in respect of electricity consumed for common use of lifts and lights in common area. Bill was raised in the name of Resident Welfare Association. Resident Welfare Association collected the said charges by apportioning them equally among 100 families and then remitted the same to the board. So in this case, this 4 lakhs is there na? This 4 lakhs is apportioned. Already 8,500 each. Now 100 families, 4 lakhs apportioned means 4 lakhs divided by 100, that is 4,000. So therefore it will be definitely taxable. And sir, what if this is 6,500? 6,500, but if you add this 4,000, monthly it will become more than 7,500, so it will become taxable. See, 6,500 is exempted, but the moment this 4,000 is added, 10,500, it exceeds 7,500, therefore it will become taxable due to that reason. The next, proceeds from sale of entry tickets to a cultural program conducted by Resident Welfare Association. So entry tickets of cultural program, we don't have any exemption. So we have exemption with respect to certain entry tickets, but that exemption is not applicable in this case. Consequently, it will be taxable. Proceeds from sale of space for advertisement in members directory. Again, this activity is nowhere in the exemption. Consequently, it will be taxable. So therefore, 8,50,000 plus 4 lakhs plus 40,000 plus 3 lakhs. So that will be 15,90,000. So this 15,90,000 will be taken as the value of taxable service. Okay. Then next, question number 17. This is related to, circular. One circular we have. So we'll see that Vimala Transports and Company, a partnership firm based at Chennai, is running a regular tourist bus service carrying passengers and goods from Chennai to Bengaluru in Karnataka state and Trivandrum in Kerala state with effect from 1st September 2021. The firm wants to know whether such interstate movement of various modes of conveyance between distinct persons, okay, is coming under IGST. So we have one circular between distinct persons. If we carry the goods or people, so there is no GST payable on the conveyance. So movement of conveyance between distinct person carrying goods or people or for repairs is not a supply and not chargeable to GST. Okay. However, applicable GST will be payable if any service is provided by one distinct person to another distinct person. So that circular we need to write here. Okay. So first you need to write when a person is required to get registered and who are distinct person, and the activities between distinct person without consideration is treated as supply. All those after you write. Thereafter you need to refer to this circular stating that such interstate movement of conveyance is neither supply of goods nor supply of service and not leviable to GST. Then question number 18. Rudraksh Kapoor, owner of Rudra's Publishing House, Ghaziabad, UP, donated some money to Divya Prakash Charitable Trust in the memory of his late father. The Divya Prakash Charitable Trust constructed a room in the school run by it from such donation and wrote, donated by Rudraksh Kapoor in the memory of his father on the door of the room so constructed. Examine whether the money donated by Rudraksh Kapoor is leviable to GST. So display of donor's name, we have one circular. What is that? If the donor name is displayed and that display of name gives business advantage to the donor, then it will be treated as consideration and it will become supply. Okay, because it will come under conditional donation. But here, display of name is not getting any business advantage to the donor. Consequently, it is not treated as consideration and it will not become supply. Then, in the above question, if Divya Prakash Charitable Trust has written on the door of the room constructed in the school run by it, from the money donated by Rudraksh Kapoor, donated by Rudraksh Publishing House. Now in this case, display of name gives business advantage to the donor. When display of name gives business advantage to the donor, it will be coming under conditional donation and therefore it will become consideration and treated as supply. So it will come under sponsorship services. So these are the points that you need to write here. Okay. First you need to write the circular, then connect the circular with the provision and elaborate, and no need to give the reference of the circular. If you write as per CBIC circular, that will be sufficient. Then question number 19. Diligent Force, a professional training institute, gets its training material of aptitude quotient printed from Durga Printing House, a printing press. The content of the material is provided by the Diligent Force, who owns the usage rights of the same, while the physical inputs, including paper used for printing, belongs to Durga Printing House. Ascertain whether supply of training material by Durga Printing House constitutes supply of goods or supply of service. So again in this regard, there is one circular which says that in printing activity, there are two elements, goods element and service element. Goods element is the paper and ink, and service element is the printing and binding. Now, in this case, so we need to check whether the principal supply is goods or principal supply is service. If the principal supply is goods, means paper and ink is the principal supply, then the entire activity will be treated as supply of goods. If printing and binding is the principal supply, then the entire activity is treated as supply of service. But in this case, for training material, the principal supply is printing but not paper and ink, therefore it will be treated as supply of service. Suppose if it is a tissue paper on which the logo of the restaurant is printed, in that case the principal supply is paper and the printing is only ancillary, therefore it will be coming under supply of goods. But in this case, it will be treated as supply of service. In view of above mentioned provisions, the supply of training material by Durga Printing House would constitute supply of service. Then question number 20. AB Private Limited, Pune, provides housekeeping services in Maharashtra. The company supplies its services exclusively through an e-commerce website owned and managed by High Tech India Private Limited, Pune. The turnover of AB Private Limited in the current year is 18 lakhs. Advise AB Private Limited as to whether they are required to obtain GST registration. So we have that services provided through an e-commerce operator is not compulsorily required to get registered. Only supplier of goods through e-commerce operator is compulsorily required to get registered. But supplier of services through e-commerce operator is not compulsorily required to get registered. Supply of services through e-commerce operator is required to register only when their aggregate turnover exceed threshold limit. In this case, so it is AB Private Limited is supplying services through the e-commerce operator, so which means that they need to register only when their aggregate turnover exceed threshold limit. And which state they are located in? Pune, Maharashtra. So which means for services, what will be the applicable threshold limit? 20 lakhs. And in this case, their turnover is only 18 lakhs, which has not exceeded the threshold limit. Consequently, AB Private Limited not required to register. Then who will pay GST? Now you need to write about as per section 9 subsection 5. As per section 9 subsection 5, in case of housekeeping services through e-commerce operator, there are 4 services through e-commerce operator. Liability to pay GST on e-commerce operator, what are they? HATE. H for housekeeping service, A for accommodation service, T for transportation of passengers in any motor vehicle, and E for eating food in the restaurant. For H and A, supplier should be unregistered. So here housekeeping service are through e-commerce operator and the supplier is unregistered. So liability to pay GST is on the e-commerce operator, that is Hi-Tech India Private Limited. Then second part of this question, you see, will your advice be any different if AB Private Limited sells ready-made garments exclusively through the e-commerce website owned and managed by Hi-Tech India Private Limited? So in case of sale of goods through e-commerce operator, supply of goods through e-commerce operator, as per section 24, they are compulsorily required to get registered irrespective of their threshold limit. Consequently, AB Private Limited is compulsorily required to get registered, and liability to pay GST is on AB Private Limited only, because only in case of supply of notified service, those 4 notified service through e-commerce operator, liability to pay GST is on e-commerce operator. In all other cases, supplier only will pay GST. Then question number 21. This question number 21 is related to who is liable to pay GST. Determine the person liable to pay GST and extent of GST payable in the following cases. All sums are exclusive of GST and GST rate is 18%. Unless otherwise specified, both service provider and recipient are located in India. GIC Insurance Company pays commission 5 lakhs to its agent. Agent has not provided any service and is eligible for exemption. So in case of service provided by insurance agent to insurance company, the liability to pay GST is on the insurance company. So here GIC Insurance Company shall pay GST. Then number 2, services provided to an individual by way of sponsorship of events. So here recipient is individual, so liability to pay GST is on supplier FCM. So when sponsorship will come under RCM, if the recipient is body corporate or firm, here the recipient is individual, so therefore FCM, service provider, will pay. Then third, service provided to a company by way of sponsorship of events. So here the recipient is body corporate or firm, therefore it will come under RCM. So the company has to pay GST under RCM. Then next, number 4, services provided by a director of a company to the company. So director services to company will come under RCM. Liability to pay GST is on the company. Suppose if the director is an employee, then there is no supply in that case. Support services provided by government to business entity. So government to business entity, only renting of immovable property we have FCM, RCM. All other service will be RCM. So the business entity will pay GST under RCM. Royalty paid by TMN publication to author. Author is unregistered. So therefore liability to pay GST is on the publisher. But if author is registered, author is having option to pay GST under FCM. If the author exercises that option for the next 1 year from the date of exercising the option, the author is only required to pay GST under FCM. Okay. So but here author is unregistered, so no need to talk about that FCM option. Then renting of immovable property services provided by government to registered business entity 10 lakhs. So liability to pay GST is on the registered business entity. What if this business entity is unregistered, then government will pay. So here business entity only will pay because it is renting of immovable property. Manpower supply service provided by individual to business entity being a company. See, manpower supply service is nowhere under RCM. Only security agency service is under RCM. Manpower supply is always FCM. So liability to pay GST is on the supplier only. Then, if it is security services by an LLP to registered business entity being a company 1 lakh. Security agency service is coming under RCM. Two conditions. Supplier should be other than body corporate. So for the purpose of GST, LLP is not a body corporate. LLP will come under firm only for the purpose of GST. So yes, in this case, the supplier is other than body corporate and the recipient should be registered. Yes, recipient is registered. So it will come under RCM. The business entity will pay because LLP is not considered as a body corporate under GST. Then security services by a company to business entity being a company. So supplier should be other than body corporate, then only RCM will come. But here the supplier is body corporate, so RCM will not come, it is FCM. So in the 10th case, service provider will pay GST. Then next 11, works contract service provided by an individual to a business entity being a company 4 lakhs. Works contract services, so provided by individual to business entity, nowhere under RCM. So it will be FCM. So liability to pay GST is on service provider. Then service by individual recovery agent to bank. So it is coming under RCM. Liability to pay GST is on the bank only because recovery agent to bank financial institution will come under RCM. Then question number 22. This is related to e-way bill. Messrs. Gyan Publishing House, registered under GST in Delhi, is engaged in printing and selling of books as well as trading of stationery items. He has provided the following information of a consignment which is to be supplied to Mumbai. Taxable value of supplies indicated on tax invoice 35,000. So in case of e-way bill, we know one point. What is that? E-way bill is required if the value of taxable supplies involved in the invoice exceeds 50,000 including GST. Suppose if there are both taxable supplies and exempted supplies, take out exempted supplies, see the value of taxable supplies and add GST. If it exceeds 50,000, then e-way bill is required. But this 50,000 limit is not applicable in case of handicrafts and goods sent on job work. Okay. Now here if you see, goods sent on job work is there 15,000. So what should be? Calculate the consignment value for the purpose of generating e-way bill. Even though this 15,000 is not a supply. Why? Because value of goods sent to job worker 15,000 is not a supply, but it should be taken. But exempted supply should not be taken. So 35,000 taxable supply on that GST 18%. So 35,000 plus 18%. So that will come to 41,300. And exempted supply don't take. Job worker 15,000, no GST. Why? Because it is not a supply. Goods sent on job work is not a supply because the goods will be processed and it will be returned back. It is not a supply. So therefore 41,300 plus 15,000 will be 56,300 and that will be taken as the consignment value. And e-way bill required as a value exceed 50,000. Even if the value does not exceed 50,000, for this 15,000 goods, e-way bill required because it is goods sent on job work and handicrafts, irrespective of the value, e-way bill is required. Then question number 23. Happy Company is a registered supplier of electric goods. It has 3 stores for electric goods in Jodhpur, Rajasthan, namely Ram Store, Sham Store and Mohan Store. They have 3 stores. It receives order for supply of electronic goods worth 1,40,000 exclusive of GST from Kishan Sons of Bhopal, Madhya Pradesh. Okay. Now Happy Company found that order worth 43,000 can be fulfilled from the company's Ram Store. Order worth 45,000 can be fulfilled from its Sham Store and remaining from its Mohan Store. All 3 stores are instructed to issue separate invoices for the goods sent to Kishan Sons. So from 3 stores, the goods are taken to the consignee. The goods are transported to Kishansons in Bhopal in a single conveyance owned by Shiv Transporters. You are required to advise Happy Company with regard to issuance of e-way bills as per the provisions of CGST Act. So, even though all these three belongs to the same consignee, but these three are taken from three different stores under three different invoices. So, for each invoice, a separate e-way bill is required. Okay. So, therefore, in this case, how many e-way bills are required? 3 e-way bills are required. One from Ram store, Sham store and Mohan store, but individually, each and every store, the consignment value should exceed 50,000 including GST. You take the first store 43,000. 43,000 plus 18% because 43,000 is excluding GST plus 18%, 50,740. So, e-way bill required. Second store 45,000 plus 18%, 5,300 e-way bill required. Third store 52,000 plus 18%, 61,360 e-way bill required. What if first store is somewhere 40,000? Then 40,000 plus 18%, 47,200. For the first store, e-way bill not required. For the second store and third store, e-way bill will be required. Like that also a question may happen. So therefore, what you need to remember is that when they are delivering the goods from different stores under different invoices, separate e-way bill is required for 3 consignments, 3 invoices, 3 separate e-way bills, and you need to take the consignment value. Each and every consignment value, if it exceeds 50,000, then e-way bill required. So even this question 23 is on e-invoice. Question number 23 is on e-way bill. Question number 24 is on QRMP. Say this. Padmavati Traders, registered in Karnataka, is engaged in supply of taxable goods. Its turnover in the preceding financial year was 230 lakhs and was furnishing its GST return on monthly basis. Okay, what was the turnover during previous year? 230 lakhs. In the beginning of April month, in the current financial year, it sought advice from its tax consultant, Dua Consultants, whether it can furnish its GST returns on a quarterly basis from now onwards. Dua Consultants advised Padmavati Traders that it cannot furnish its return on a quarterly basis as the GST law does not provide for quarterly return under any circumstances. Discuss the technical veracity of the advice given by Dua Consultants. First, when a person can go for QRMP, quarterly return monthly payment, if QRMP is an optional scheme and it is applicable to a registered person whose aggregate turnover during the previous year does not exceed 5 crores. In the present case, the turnover during the previous year was 2.3 crores. It does not exceed 5 crores. So during the current year, first quarter, they can go for QRMP. And what is the time limit for opting into QRMP? 1 month after and 2 months before. So April to June, they want to go for QRMP na. So 1 month after, remember A for after, B for before. A will be 1, B will be 2. First alphabet is A, second alphabet is B. So 1 month after, 2 months before. So April, 1 month after means what? 30th April. 2 months before means what? February. So from February 1st to April 30th, any time they can go into QRMP. And if they opt for QRMP, they are required to file GSTR1 and GSTR3B on a quarterly basis. So all these points you need to write. GSTR1, they need to file by 13th of the month following every quarter for the quarter. So by 13th of the month following the quarter, they need to file GSTR1. GSTR3B by 22nd or 24th. Where are they located? Karnataka. So 22nd of the month following every quarter, they need to file GSTR3B. And for the first month and second month in the quarter, they need to pay tax either under fixed sum method or under self-assessment method by 25th of the month following each month. So these are the points they need to. And one more point also you need to write that QRMP scheme is GSTIN wise. If they have multiple registrations, with respect to each registration, they can decide whether to pay tax under quarterly return, like quarterly or monthly, they can decide. So that is about the answer you need to write. Okay, like a theory question only, but these points should be covered. Then question number 25. So this is on exemptions, clinical establishment. Swasthya Nursing Home, a clinical establishment, offers the following services. Rooms provided to inpatients where the room charges per day are 6,500. We have one exemption. If the room charges per day to inpatient does not exceed 5,000, then only it is exempted. If it exceeds 5,000, entirely it will be taxable. But this 5,000 restriction is not applicable for ICU charges, then like any ICU, NICU, CCU like that, except ICU charges. In other cases, so 5,000 rupees per day. So in this case it exceeds, so it will be taxable. Then next, plastic surgery conducted to repair cleft lip of a newborn baby. Generally, plastic surgery, cosmetic surgery, hair transplantation is not healthcare service. But if these are carried out to restore anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then it will be treated as healthcare service. In this case, it is to repair the cleft lip of a newborn baby, which is a congenital defect. Therefore, it will come under healthcare service and it is exempted. Air ambulance service to transport critically ill patients from distant locations to Swasthya nursing home. Air ambulance service means what? Like ambulance, any, like only airways. Ambulance in airways, ambulance in airways, or ambulance in roadways, or ambulance in waterways, whatever it may be, ambulance service is exempted. Transportation of a patient in an ambulance is exempted, whether it is part of healthcare or not part of healthcare. Supply of food to inpatients as per the advice of the doctor or nutritionist from the restaurant Annapurna Bhavan located in the basement of Swasthya nursing home. The food is prepared by employees and nothing is outsourced to any third party vendors. Now, so this is supply of food to inpatients, those who are admitted there, which means it will be exempted. What if food is sold to others, outsiders, outpatients, or like visitors, etc., then it will become taxable. Homeopathic medical treatment. Homeopathic medical treatment will be exempted because homeopathy is also a recognized system of medicine. So due to that reason, it is exempted. Swasthya nursing home also operates a cord blood bank which provides service in relation to preservation of stem cells. Taxable. So why it will be taxable? Because previously we had an exemption with respect to cord blood banks. Now that exemption is withdrawn. Due to that reason, it will become taxable. So first one and last one is taxable and all others are exempted. Okay. Then the next question is question number 26. So look into the next question, that is question number 26. Determine the amount to be paid through electronic cash ledger for Messrs. A Limited, assuming it is not covered by exception to Rule 86B. So Rule 86B says that whenever taxable turnover of a particular registered person exceeds 50 lakhs in a particular month, then that person is required to pay 1% of their gross liability through electronic cash ledger, even though there is sufficient balance available in their electronic credit ledger. So here, while counting the turnover, we need to take only taxable turnover. We should not take zero rated, we should not take non-taxable, we should not take exempted. So export turnover don't take for counting, and export turnover with payment of GST, both should not be taken. Supply of goods or service or both to SCZ, that is zero rated, we should not take zero rated. Exempted turnover should not be taken. Supplies which are not leviable to GST should not be taken. Now, turnover for April 2021 is 100 lakhs. From this 100 lakhs, you exclude all these things. So from 100 lakhs, what is this? So 25 plus 20 plus 10 plus 30 plus 15. That is total 100 lakhs. So in the taxable turnover is 100 lakhs. So therefore, this is in addition to this. So taxable turnover, this total is 100 lakhs. So that you should not take. But this 100 lakhs taxable turnover should be taken and it exceeds 50 lakhs. So due to that reason, Rule 86B will be applicable. So as per Rule 86B, so what is the gross liability? 100 lakhs into 18%. So 100 lakhs into 18% is 18 lakhs. But we have 20 lakhs in credit ledger. Even then, we can use only 99%. 1%, that is 18 lakhs into 1% that is 18,000, we have to pay using cash ledger, and remaining 17,82,000, that is 99%, we can pay from credit ledger. So still there will be some balance in the credit ledger. How much? So we are using 17,82,000 only now. That is, out of 18 lakhs, 1% to cash ledger, 99% to credit ledger, means 17,82,000. So from 20 lakhs, if you take out 17,82,000, so only 2,18,000 will be the balance in credit ledger for the purpose of utilization. Then next question number 27. Apte and Apte Limited is located in India and holding 51% of shares of Wilson Limited of USA based company. Wilson Limited provides business auxiliary services to Apte and Apte Limited. So this is a case of import of services. Import of services from associated enterprises. Who are treated as associated enterprises? Associated enterprise is defined under section 92A of Income Tax Act. As per that, if any entity is holding 26% in the other entity, they both are treated as associated. So here 51%, holding 51% shares, so definitely it is import of service from associated enterprises. So what should be taken as the time of supply? In case of import of service from associated enterprises, we have a proviso which says that we need to take date of entry in the books of recipient or date on which payment is made to supplier by the recipient, whichever is earlier should be taken. First, what is the date of entry in the books of recipient? Who is recipient? Apte and Apte. So date of debit in the books of accounts of Apte and Apte 30/12/2020, and date on which payment is made. What is the date on which payment is made by them? 23/3/2021. So whichever is earlier, that is 30/12/2020 will be taken. Generally, in case of import of services, the time of supply under section 13 subsection 3 is date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But in case of import of services from associated enterprises, we need to take a different point, that is date on which payment is made to supplier same, but there won't be any invoice between associated enterprises. So due to that reason, we need to take date of entry in the books of recipient. Then question number 28. Neelkant Private Limited, a registered supplier of goods and services at Kolkata, has furnished the following information for the month of February. Intrastate taxable supply of goods, including 1 lakh received as advance in January. The invoice for the entire sale value is issued on 15th February. So again, this is related to computation of net GST payable. First it is outward supply. So including 1 lakh received as advance. So in January, they are asking us to determine it for the month of February. For the month of February, so the invoice for the entire sale was issued on 15th February. Whether this 1 lakh will be taxed in the month of January? No. In case of goods, GST not payable on advances. So GST payable on advances only in case of services, not in case of goods. So GST payable only on advances in case of services. Here 1 lakh is advance with respect to the goods. So GST would not have been paid in January. So for entire 4 lakhs, GST will be payable in February only. So it will be taxable under FCM. Then next, purchase of goods from a composition dealer registered in Kolkata. So this is inward supply. This is inward supply. Purchase of goods from a composition scheme dealer. First of all, there won't be any GST. So because a person opting for composition scheme should not charge any GST. So on this, there is no tax that is paid. Okay. So the question of ITC also will not arise. Then next one, services provided by way of labor contracts for repairing a single residential unit otherwise than as a part of residential complex. Okay. So it is repair. Already we saw that repair of a single residential unit will be taxable. This is outward, and repair of a single residential unit will be taxable, and it is taxable under FCM. Membership of a club availed for employees working in the factory. This is inward. So on this inward, so we have to pay GST under FCM. Okay. So it is not under RCM. Can we take ITC? No. Membership of a club, health and fitness center is blocked credit. But only one exception that we have is if it is under a statutory obligation. Nowhere it is given that it is under a statutory obligation. So therefore there is no ITC with respect to this. Then goods transport services received from a GTA, GST is payable at 12%. So which means it is taxable under FCM. This is GTA services received. So inward supply, and it will be taxable under FCM. Why? Because the moment you see 12%, so it will definitely be FCM only. Liability to pay GST is on supplier. When GTA is opting to pay GST under FCM, then only it will be 12%. So therefore, GST is payable at 12%. It is an interstate transaction. So it will be taxable under forward charge mechanism. So liability to pay GST is on the supplier. And can they take ITC with respect to this? Yes, ITC available because it's an inward supply. Then interstate services provided by way of training in recreational activities. So it is outward. Training in recreational activities relating to sports is exempted if it is by a charitable trust. Is it a charitable trust? No. So training or coaching in recreational activities relating to sports only by a charitable trust is exempted. So here it will be taxable and it will come under FCM. Then interstate security services provided to ABC Higher Secondary School for their annual day function organized in Fintex Auditorium outside the school campus. Okay. So now in this case, this 15,000, this is interstate security services provided. So it's an outward supply. It's an outward supply, and security agency services to school for their annual day function in Fintex Auditorium. So actually it is exempted. Security and housekeeping services to category 1 education institution is exempted, provided it is within the premises. It is not within the premises, it is outside the premises. Due to that reason, it will be taxable under FCM. Then inputs to be received in 4 lots. So this is an inward supply. Purchases, out of which second lot was received during the month. But in case of input, so it is taxable under FCM. So liability to pay GST is on supplier, but no ITC. Why there is no ITC? Because whenever we have some inputs, so we can take ITC on receipt of last lot if the goods are received in lots or installments. In this case, second lot only received in this month. Then whenever the fourth lot is received in that month, only entire ITC can be taken. So for this month, there is no ITC. And we have opening balance of ITC, that is CGST 57 and IGST 50,000. Now, rates of CGST, SGST 9%, 9%, 18% respectively. Both inward and outward supplies are exclusive of taxes wherever applicable. All conditions necessary for availing ITC fulfilled. The turnover of Nilkant Private Limited was 2.5 crore in the preceding financial year. Okay. Now, in this case, we need to take first statement. What is the first statement? Statement showing GST payable under forward charge mechanism, gross GST payable under FCM. So first one. So intrastate, given as intrastate. So 1 lakh into 1 lakh or 4 lakhs, 4 lakhs. 4 lakhs into 9%, 36,000 and 36,000. And then next outward, third point FCM. So repair 1 lakh and it is intra. So again 1 lakh into 9%, 9,000 and 9,000. So that is second. Then next outward, sixth point outward, interstate training. So 10,000 into 18%, IGST 1,800. The next outward is seventh point. Again, that is also interstate. So 15,000. So 15,000 into 18%, 2,700. So this is the gross GST payable under FCM, statement 1. Then gross GST payable on inward supplies under RCM. Is there any inward supply under RCM? You check. So second one, no. Then fourth one, no. And fifth one also no. Last one also no. So we don't have statement 2. That is GST payable under RCM. So then statement 3, computation of ITC. Opening balance 57 CGST, IGST 50. IGST 50. Then next, first inward supply, no GST. And next inward supply, membership, no ITC. Next GTA, we can take 12% na, that too it is interstate, which means 2 lakhs into 12%, 24,000. So after opening balance, 24,000. Any other inward supply, last inward supply is there, but ITC not available, so we cannot take. So the ITC is CGST 57, SGST nil, IGST 74. Now last statement, statement 4, computation of net GST payable. First gross GST payable, so how much? 45, 4,500. Now IGST credit we have. First we need to utilize IGST credit, 74,000. We will use it for payment of IGST liability first. Thereafter, between CGST, SGST, where we have credit, we have CGST credit. So use it for SGST liability. We have lot of CGST credit, but we don't have SGST credit. So therefore, whatever IGST credit that you have, before utilizing CGST liability, utilize it for payment of SGST liability, because we have already some CGST credit. So how much is SGST liability? 45. So 74,000 minus 4,500 minus 45,000. Still how much is there? 24,500 that you will use for CGST liability. So now CGST credit 57,000 we have, that also we can use. So the net GST payable will be nil. And what is the excess credit that is carried forward? Out of this 57,000, 20,500 we have utilized. So remaining amount will be carried forward. Okay. So that is how we need to determine. And here, why won't we apply rule 86B? When rule 86B will be applicable? If monthly taxable turnover exceed 50 lakhs. Just check what is the outward supply. 4 lakhs, then 1 lakh, 5 lakhs and 10,000. So it does not exceed 5 lakhs, 50 lakhs. Only when it exceeds 50 lakhs in a month, then only 86B will be applicable. You need to check out for that information also. So you see the taxable turnover, outward supplies. So wherever the taxable outward supplies exceeds 50 lakhs in a particular month, then only we need to apply rule 86B. Okay. Otherwise we don't have to. So we can use fully ITC for payment of the liability. Then question number 29, RIMGIM says a registered supplier receives 100 invoices for inward supply of goods or services involving GST of 10 lakhs. 100 invoices, GST 10 lakhs from various suppliers during the month of January 2022. Out of 100 invoices, details of 80 invoices involving GST of 6 lakhs have been furnished by the suppliers in their respective GSTR1 filed on the prescribed due date, therefore, and such details have also been duly communicated to the recipients in 2B. Compute the ITC that can be claimed by RIMGIM sales in GSTR 3B for the month of January 2022 to be filed by 20th February, assuming that this entire 10 lakhs is otherwise eligible for ITC. So means we don't have any blocked credits, etc. in this 10 lakhs. So therefore, we can take only 6 lakhs as ITC. Why 6 lakhs can be taken? Only matched ITC can be taken, and the remaining 4 lakhs with respect to 20 invoices cannot be taken. So only 6 lakhs can be taken. Now, in this question, suppose if we get out of these 10 lakhs, that is out of these 6 lakhs invoices, we have some invoices which are blocked credit 2 lakhs. Now what we will do? 6 lakhs minus 2 lakhs. So only 4 lakhs will be taken as ITC. Okay. Why? Because 2 lakhs blocked credit is there. Suppose if they give out of these 6 lakhs, 1.5 lakhs worth of invoices, so is used for non-business purpose, you will not take, because you need to remember the format. First you need to take ITC as per GSTR 2B minus 3 things we need to exclude. What are those 3 things? Blocked credit, then used for non-business purpose, used for exempted outward supply. Then 3 things we will add: GST paid under RCM, and ITC re-avail, which is reversed earlier, and ITC pertaining to some other period which we are taking during this period that we will add, and that will be called as ITC availed in GSTR 3B. Then question number 30, examine whether the supplier of goods is liable to get registered in the following independent cases. Rudra Builders of Rohini, Delhi is exclusively engaged in intra-state taxable supply of building bricks. Its aggregate turnover in the current financial year is 23 lakhs. Now, when a person is doing business in Delhi, the applicable threshold limit will be 40 lakhs if they are exclusively engaged in supply of goods. So in this case, they are exclusively engaged in supply of goods. So the applicable threshold limit will be 40 lakhs. However, if they are engaged in supply of, so supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles, then the applicable limit will be 20 lakhs only, not 40 lakhs. So in this case, the applicable threshold limit to Rudra Builders will be 20 lakhs and their turnover is 23 lakhs. So therefore, as it exceeds 20 lakhs, they are liable to get registered. So that is the answer. So in this case, the applicable threshold limit will be 20 lakhs and thus they are liable to get registered. Then next, Hira of Himachal Pradesh is exclusively engaged in intrastate taxable supply of footwear. His turnover in the current financial year from Himachal Pradesh showroom is 32 lakhs. He has another showroom in Nagaland with a turnover of 11 lakhs in the current financial year. So they are doing business in multiple states. In this, one of the state is a special category state. What is a special category state? Manipur, Mizoram, Tripura, Nagaland. So Nagaland is a special category state and taxable supplies are made from that state. So the applicable threshold limit will be 10 lakhs. So here their aggregate turnover is 32 plus 11. So more than 10 lakhs. So therefore they are liable to get registered, and where they should register in Himachal Pradesh and Nagaland. So see here the applicable limit is 10 lakhs. Further they are required to get registered in Himachal Pradesh and Nagaland as they are making taxable supplies from both the states. Suppose in this second question, what will be your answer? If they have another showroom in Nagaland from which they make exempted supplies, then the applicable limit will be 20 lakhs. Because if you are doing business in multiple states, one of the state is a special category state, Manipur, Mizoram, Tripura, Nagaland, and if taxable supplies are made from that state, then only it will be 10 lakhs. Otherwise, the limit will be 20 lakhs. So if they are making exempted supplies in Nagaland, then the applicable threshold limit will be 20 lakhs. And here, as the aggregate turnover exceed 20 lakhs, then also they need to register, but they will register only in Himachal Pradesh, but not in Nagaland. Okay, but that is not the question answer here. For the question, we have written the answer, but I am telling you what if they give in Nagaland, they are making exempted supplies. Then next, question number 31, Fashion Queen Limited, registered under GST and dealing in baby products, has an aggregate turnover of 40 crores in the preceding financial year. The tax consultant of Fashion Queen Limited advised it to issue e-invoices mandatorily. However, Fashion Queen Limited is of the view that since its aggregate turnover is less than the threshold limit applicable for e-invoicing, it is not required to give e-invoices. You are required to comment upon the validity of the advice given by the tax consultant. So when e-invoicing will be applicable? If during any preceding financial year from 2017-18 to 2021-22 exceeds 10 crores. So from 2017-18 onwards, in any financial year, if the aggregate turnover exceeds 10 crores, then during the current financial year, so e-invoicing is applicable with respect to outward supplies made to registered persons, B2B. B2B e-invoicing will be applicable. Okay. In this case, their aggregate turnover during the preceding financial year is 40 crores, which is more than 10 crores. So therefore, during the current year, Fashion Queen Limited is mandatorily required to give e-invoices with respect to the outward supplies made to registered persons. Okay. Then B part, this is the first part. Second part, Ministry of Communications and Information Technology, a government department registered under GST, has an aggregate turnover of 52 crore in the preceding financial year. You are required to comment whether Ministry of Communications and Information Technology is required to give e-invoice. There are some people who are not required to give e-invoice. Who are they? Biggest. Remember biggest. B for banking company. So banking company and financial institution, they are not required to give e-invoice even though their aggregate turnover exceeds 10 crores. Then I for insurance company. Then G for GTA, goods transport agency. Another G is government department or local authority. Then E for exhibition of film in a multiplex theater. Then S for SEZ unit. T for transportation of passengers. So now in this case, so Ministry of Communication and Information Technology, government department is covered in the list. So even though their aggregate turnover exceeds 10 crores, with respect to their outward supplies to registered persons, they are not required to give e-invoice, but instead will give a normal invoice. What is the difference between a normal invoice and e-invoice? A normal invoice, when uploaded in the invoice registration portal and obtain three things: invoice reference number, QR code and digital signature, then that will be called as a e-invoice. Then question number 32, Sundar is HRD head of Infosys for the year ending March 31st, 2019. CTC of Sundar as per employment agreement is as follows. CTC means cost to company. Salary 2 lakh per month, residential accommodation 6 lakhs, conveyance facility 3 lakhs. Now salary will be excluded from supply. Why? Because services provided by employee to employer in the course of employment is excluded from supply as per section 7 subsection 2 read with schedule 3 of CGST Act. Okay, so due to that reason it is excluded from supply, no GST. What about these two? These two are called as perquisites. How do we know that these two are perquisites? Because this forms part of CTC, cost to company, means this form part of salary offer document as per employment agreement. So anything given by employer to employee which forms part of salary offer document will be coming under perquisite. Perquisite also forming part of salary, therefore again on that also there is no GST. So on entire 33 lakhs there is no GST that is applicable. Then on January 1st 2019, Infosys gifts a new car to Sundar. Gift. So gift means it is not covered under salary of a document. So gift of car is not covered by CTC as well as employment agreement, then gift. So gift given by employer to employee, if it does not exceed 50,000 per annum per employee, then it is not a supply. If the value of gift exceeds 50,000 per annum per employee, then entirely it will be treated as supply. So in this case, gift of new car to Sundar worth 12 lakhs. So whether it exceeds 50,000, yes. So therefore it will become supply under 7(1)(c) and it will be chargeable to GST in the hands of Infosys. Then Sundar owns a commercial flat. He has given it on rent to Infosys. So renting of commercial property. So renting of commercial property will be taxable and monthly rent being 3 lakhs. So 3 lakhs into 12 means so 36 lakhs. So renting of commercial property will be taxable under FCM. So here 36 lakhs is the rent amount. So definitely it exceeds threshold amount. So Sundar is required to register and pay GST on this rent. Discuss whether GST is applicable. Assume that the rate of GST 28% for car and 18% for others. So each and every point we need to explain and write. First, salary, rent in the hands of Sundar, rent received and salary whatever is received. Okay. Then taxability of supply of residential accommodation and conveyance facility, then gift of car. So all these points we need to elaborate and write. Then next, question number 33, Shivaji Private Limited, a registered supplier, supplies the following goods and services for construction of buildings and complexes. Excavators for required period at per hour rate. Manpower for operation of excavators at a per day rate. Soil testing and seismic evaluation at per sample rate. The excavators are invariably hired out along with operators. Similarly, excavator operators are supplied only when the excavator is hired out, which means that so this excavator operators, hiring of excavators and supply of manpower for excavators is naturally bundled in the ordinary course of business. For the given month, the receipts exclusive of GST of Shivaji Private Limited are as under: hire charges for excavators 18 lakhs, service for supply of manpower 20,000, service charges for soil testing and seismic evaluation at 3 sites 2 lakh 50. Now, hiring of excavators rate of GST 12%, supply of manpower service 18%, both are taxable, naturally bundled in the ordinary course of business. What is the principal supply? Hiring of excavators is the principal supply. Therefore, we will take the rate of GST 12% on 18 lakhs. We will multiply 12%. On 20,000 also we will multiply 12%, not 18%. But this soil testing and seismic evaluation is an independent activity. So that will be taxable at the rate applicable to this, that is 18%. So this will be taken as the gross liability. So this is a question related to composition, like composite supply, mixed supply. So related to that, so 18 lakhs into 12%, 2,16,000, 20,000 into 12%, 2,400, 2,50,000 into 18%, 45,000. So this is the GST liability. Then question number 34. So this is a very big question, but we need to smartly arrive at the answer related to this. See this, Andes Private Limited, a registered supplier, manufactures two products, product A and product B. Well, product A is taxable under forward charge, product B is taxable under reverse charge. Okay, the following details are provided for all these, product A and product B. Determine the time of supply of goods. So when you read this, so a lot of data is there, but what we need ultimately is the data based on the provision. So now there are two products, so that is product A and product B. So question number 34, say this. First we will see product A. With respect to product A, they have given that product A is goods under FCM. In case of goods under FCM, what is the time of supply? Time of supply is determined under section 12 subsection 2. What does it say? It will say that we need to take actual date of invoice or due date of invoice, actual date of invoice or due date of invoice, whichever is earlier should be taken. Okay, and here this is goods FCM 12 subsection to read with notification 66/2017. So what will be taken as the actual date of invoice, that we need to check, and what will be the due date of invoice? So due date of invoice determined under section 31. So as per section 31, we need to take due date of invoice in case of goods, supply involving movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery, that will be taken as the due date of invoice. So let's get these two data from the question. So product A alone we need to see. For product A, from this data we need to search for invoice. What is the date on which they have given the invoice? So payment of 1 lakh for A, payment of 1 lakh made by buyer for supply of A to be delivered. To be delivered means what? Supply involves movement of goods. When supply involves movement of goods, what will be taken as the due date of invoice? At the time of removal. At the time of removal will be taken. So we need to get two datas here. First, what is the actual date on which invoice is given? What is the date on which goods are removed? Okay. So this is payment. This is receipt of 1 lakh, product B. Product A manufactured and removed. Product A manufactured and removed 5th March. So 5th March we are taking as the due date of invoice, date of removal, at the time of removal. Then receipt of product A, product B receipt, invoice for supply of product A 4th March. So 4th March is the actual date of invoice. So actual date of invoice or due date of invoice, whichever is earlier, therefore time of supply is 4th March, that will be taken. So we completed for product A. Now we need to discuss for product B. Product B is goods covered under RCM. Goods under RCM. In case of goods covered under RCM, we need to determine as per section 12 subsection 3. So what will be taken as the time of supply? 3 dates we have. What are the 3 dates? We need to take date of receipt of goods. Date of receipt of goods. Date of receipt of goods. And we need to take date on which payment is made. Date of payment to supplier. Date on which payment is made to supplier. And then we need to take, so 31st day from the date of invoice. 31st day from date of invoice, whichever is earlier will be taken. Now with respect to product B, we need to get these 3 datas. Date on which goods are received, date on which payment is made to supplier. First you see product B where we have, so 17 February, payment of 2 lakh made by buyer for supply of product B to be delivered in the month of March. So 2 lakhs payment is made 17 February. So 2 lakhs on 17th February. Then next, then what we have for product B, product B, receipt of product A, product B manufactured and removed, receipt of product B. So when the product B is received, 23rd March, so 23rd March is the date on which product B is received. Then date of invoice we need. So what is the date of invoice for product B? 4 lakhs. Product B invoice 11th March. So which means 11th March plus 31 days we need. So what is 11th March plus 31 days? So in March 31 days only, 31 minus 11, so 20 days. So in April 11 days, that will be 11th April will be taken. But invoice is for 4 lakhs, but only 2 lakhs is received on 17th February. Then there is another 2 lakhs. What is that another 2 lakhs? Because invoice is for 4 lakhs na. So the another 2 lakhs, balance payment made by buyer of B. So payment made by buyer of B is 1st April. So 2 lakhs on 1st April. Now we have 2 time of supplies. So time of supply with respect to advance. Time of supply with respect to advance. What will be taken? Time of supply with respect to advance of 2 lakhs. So date of receipt of goods 23rd March. Date on which payment is made 17th February. 31st day from the date of invoice 11th April. So 17th February will be taken. Then time of supply with respect to balance of 2 lakhs. Time of supply with respect to balance of 2 lakhs. What will be taken? So with respect to the balance amount we will take again 23rd March or 1st April or 11th April, whichever is earlier will be 23rd of March. That will be taken as the time of supply. So that's how we need to derive at the answer for this. Okay. First we need to write the provision. Then time of supply with respect to product A, so is 4th March. With respect to product B is 17th February to the extent of 2 lakhs, and for remaining 2 lakhs it will be 23rd March. So for balance 2 lakhs it will be 23rd March that will be taken. Then question number 35. Renudut Limited enters into contract with XYZ Limited on 2nd July 2019 for a period of 2 years for construction of a new building to be used for commercial purpose. 2 years they have entered into contract, so means it's a continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligation that we need to check. Here it takes 2 years for a total consideration of 150 lakhs as per the terms of the contract. So Renudut Limited is required to make payment at different stages of completion of the building, namely 50%, 75% and 100%. Determine the time of supply using relevant details given as under. Now this 150 lakhs is not payable in single shot. It will be payable in 3 installments, which means that it's a continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligations is known as a continuous supply of service. In case of continuous supply of service, they are asking us to determine the time of supply. So what will be the time of supply? So services. In case of services, we need to check FCM, whether invoice is given within the due date or not. If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice is not given within due date, then completion date or payment date, whichever is earlier, will be taken. So in this case, what will be taken as the time of supply? So for that we need to know the due date of invoice. Again, what will be taken as the due date of invoice in case of continuous supply of services? So if the payments installment date is given in the contract, the installment date itself will be taken as the due date of invoice. If the payment is linked to completion of event, in this case the payment is linked to completion of event, so which means that, so the due date of invoice is the date on which such event is completed, means the date on which 50% is completed, the date on which 75% is completed, the date on which 100% is completed, that will be taken as the due date of invoice. So therefore in this what you need to find is that, so initial booking, 50% completion, 75% completion of the building, 100% completion of the building. What will be taken as the due date of invoice? First we will see that due date of invoice. Here payment is linked to completion of an event. For initial booking, all are same date, therefore 2/7/2019. Whereas for 50% completion of the building, so we need to take when it is completed 15/3, that 15/3 will be taken as the date of due date of invoice. That is, when payment is linked to completion of event, whenever that event is completed, that will be taken as a due date of invoice. Again, 75% complete on which date? 26/2020. So the 26/2020 will be taken as due date of invoice. Then 100% complete on which date? 39/20. So therefore, the 39/2020 will be taken as the due date of invoice. So we got the due date of invoice, and this is what? Actual date of invoice. Now, what is the time of supply in case of services? 13 subsection 2. If invoice is given within due date, then invoice date or payment date, whichever is earlier. If invoice not given within due date, then completion date or payment date, whichever is earlier. So that will be taken as the time of supply. Now, first case, all are on the same date. So that date itself will be taken as the time of supply. Over. Then second, whether invoice is given within the due date. So actual date is 22/3 and due date is 15/3. No, invoice is not given within due date. When invoice is not given within due date, we'll take completion date or payment date, whichever is earlier. What is completion date? 15/3. What is the payment date? 15/3. Payment date 29/3. Which is earlier? 15/3/2020 is time of supply. Then next again. So next case, so due date of invoice is 26, but the actual date of invoice is 24/7, means invoice not given within due date. When invoice not given within due date, again we will take completion date or payment date, whichever is earlier. So therefore 26/2020 will be taken last. So invoice is given on 39 and the due date also 39, means invoice given within the time limit. When invoice is given within the time limit, we will take date of invoice or date of payment, whichever is earlier. So that is 29/2020 that will be taken. So first case it is 27 and next case it is 15/3. Okay, and thereafter next case it is 26 and thereafter next case it is 29. So like that we need to arrive at the time of supply. Here, so continuous supply of services, first you need to know the due date of invoice and thereafter you need to know the time of supply provisions in case of FCM. Then this is a very good question. So this can be tested in exam. So because it connects time of supply in case of continuous supply of services. Then question number 36. This question is related to composition scheme. The following information is noted from the records of X, a technical consultant located in Mumbai, and Y, a software developer located in Pune. So X is a technical consultant and he commenced business July 25, 2017. For the financial year 18-19, his turnover is 43 lakhs. For the current financial year 2019, from 1st April, they have given the invoices. Now X got registration on July 1, 2017 and Y is not registered on April 1st. So now what is that we need to determine? So X and Y want to avail the benefit of special scheme notified under 10(2)(a). As per section 10(2)(a), a person who is engaged in supply of any services so can go for composition scheme 10(2)(a) if their aggregate turnover during the previous year does not exceed 50 lakhs. In the present case, X for the financial year 2019-20, current financial year 19-20. So what is the previous year 18-19? So what was the turnover? 43 lakhs. So it does not exceed 50 lakhs. So during the current year, definitely they can go for composition scheme. Okay, under 10(2)(a). And discuss the tax consequences for the half year ending September 2019 and the normal rate of GST is 18%. Now, when they go for composition scheme under 10(2)(a), what is the applicable rate of GST? 6%, 3% CGST, 3% SGST. Now, so up to what turnover they will be under composition scheme during the current year? First, aggregate turnover of X during the previous year does not exceed 50 lakhs. So current year 2019-20, they can go for composition scheme. During the current year 2019-20, up to 50 lakhs, they will be under composition scheme. Thereafter, they will pay tax under regular scheme. So therefore, 3 plus 17. So 3 plus 17, 20. 20 plus 18, 38. 38 plus 12, 50. Up to this turnover, they will be into composition scheme and they will pay GST at 6%. Thereafter, after crossing 50 lakhs, they will go for normal scheme. So with respect to these two invoices, they will pay GST under normal scheme at 18%. but CGST, SGST liability. Okay. And again, next year, can they go for composition scheme? No, because current year they crossed 50 lakhs. Means next year, for next year, this year is the previous year, it exceeds 50 lakhs. So they cannot go for composition scheme in the next year. This is in case of X. So for first four invoices, okay, 1, 2, 3, 4 invoices, it will be 6%. And next to 2 invoices, it will be 18%. Okay. Then next, in case of Y, we will see Y commenced business only this year, 2019 only they commenced business, and so Y is not registered as on April 1st, 2019. Can they go for composition scheme? Yes, because what was the turnover of Y during previous year? 0, and it does not exceed 50 lakhs. So current year under 10 to A, Y can opt for composition scheme. But only when they register, they will opt for composition scheme. So when Y will register? First they will cross the 20 lakhs limit, then only they will register. Okay, because for a service provider who is doing service sector business and located in Pune, the applicable limit will be 20 lakhs. So only after crossing 20 lakhs of threshold limit, they will register and they will be paying the GST. So first 3 plus 17, there is no GST. So 3 lakhs plus 17 lakhs, no GST. Why? 20 lakhs. Up to 20 lakhs, they will not register. Consequently, there is no GST. Thereafter, once they register, for the remaining turnover up to 50, because the overall turnover is 50, in that first 20, no GST. In the remaining 30 lakhs, what is the remaining 30 lakhs? 18 and 12. On that, they will pay 6%. Thereafter, the balance 20 and 56, they will pay 18%. So overall limit of 50 lakhs, first 20 no GST, remaining 30 GST at 6%. So see here, 3 lakhs, 0 liability. Next, 0. Next 2 invoices, so will be 6%, 6%, and last 2 invoices will be 18% and 18%. So that's how they need to compute the GST payable under composition scheme and regular scheme. We can do it in a single statement also. Then, and whenever you are showing the liability, show it under CGST, SGST liability, because so a person who is making interstate supplies cannot opt for composition scheme. So all these transactions are intrastate only. Then question number 37, Miss Nitya has following balances in her electronic cash ledger as on 28th February as per GST portal. So this is the balance in the cash ledger. So CGST, SGST, tax interest penalty, IGST, tax interest penalty. Her liability for the month of February for CGST, SGST was 75,000 each. So 75,000 CGST, SGST liability. She failed to pay the tax and contacted you as a legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any, by utilizing the available balance to the maximum extent possible as per GST law. She wants to pay tax on 20th April. Actually, this transactions pertains to February. For February, what is the due date? Usually the due date of payment of GST will be the due date of filing 3B, that is 20th of the next month. For February month, what is the due date of GST at 3B? 20th of March. So 20th of March, she should have made the payment. But she is going to make the payment on 20th April. So which means there is a delay by 1 month. So for that 1 month interest needs to be computed. So 20th March to 20th April means how many days? In March 11 days, April 20 days. For 31 days, the interest needs to be computed on 75,000. 75,000 into 18% into, so 31 divided by 365, that is 1146.57. So 1147 will be taken as the interest under CGST and interest under SGST. So let's see their liability. So the tax liability of Nitya for CGST 75,000, interest 1147, SGST 75,000, interest 1147. This is their gross liability. Now under the respective heads, how much we have? So under CGST tax we have 40,000, and CGST interest we have 1,000, SGST tax we have 80,000, SGST interest we have 400. So therefore 40,000, 1,000, 80,000 and 400 we will use. So now what will happen? There is a shortfall of CGST 35 and CGST interest 147 and SGST tax no shortfall. We have excess amount IGST 747. So these amounts we can make payment using the other. Okay, so IGST tax, how much we have? 45,000. So using 45,000 we can make payment of 35,000. So 35,000 shortfall can be paid using IGST head. So therefore we need to file one form GST PMT9. So that PMT9, so when we file, we can shift the balance from one cell to another cell. So from IGST tax, so this 45,000 we can shift and we can use it for payment of 35,000. Thereafter 147 rupees shortfall of interest we can transfer from penalty CGST itself. We have anywhere you can transfer, even from IGST tax 45,000. From 45,000 we paid 35,000. So therefore still 10,000 is there na. The 10,000 we can transfer to interest and 747. We can use any cell for payment of this, which means whether any amount this person is required to pay, no, because there is enough balances in the cash ledger. Using that we can make the payment. So there is no need of making any payment out of cash because there is already enough balance in the cash ledger. That's what we need to write here. Not necessary that this way only we need to follow. Any alternative way we can do, but only thing is that the amount payable in cash will be completely nil. From any head to any head you can use. This is not credit ledger, it is cash ledger. The next question, number 38. Messrs A to Z, a proprietary firm registered under GST, is engaged in providing various services under one roof. The firm provides the following information pertaining to supplies made or input service available by it during the month of March 2022. Amount collected for loading, unloading, warehousing of potato chips. So this is outward supply, correct? This is outward supply, and here amount collected for loading, unloading, packing and warehousing of potato chips is potato chips agricultural produce? No. Potato chips is not agricultural produce. Therefore, this is not service in relation to agricultural produce. Consequently, it will be taxable and it will be taxable under FCM. Fee paid for yoga camp conducted by the charitable trust registered under section 12AA of Income Tax Act for employees of the firm. So, yoga camp by a charitable trust. So yoga will come under advancement of religion, spirituality, yoga. So this is an outward supply. Advancement of spirituality, yoga is a charitable activity, so which is done by a charitable trust. Therefore, it will be exempted. Then interest received on fixed deposits with Apna Bank by the firm. So interest on fixed deposits, interest on loans, advances and deposits is exempted. So this is an outward supply and it is exempted. Professional services provided to foreign diplomatic mission located in India. Only services provided by foreign diplomatic mission is exempted, but provided to foreign diplomatic mission is not exempted. So this is outward. Okay, and second one is not actually outward, it is inward. Fee paid to, fee paid to. So fee paid to means they are making the payment. So therefore that is fee paid to. So professional service provided to foreign diplomatic mission will be taxable and it will be taxable under FCM. Then recovery agent service provided to ABC Finance Limited and NBFC located in Delhi. So this is also outward supply. Recovery agent services provided to ABC Finance Limited and NBFC. So this is an outward supply, but it will be taxable under RCM. Why? In case of recovery agent service to bank or financial institution, liability to pay GST is on bank or financial institution under RCM. So therefore, here liability to pay GST is under RCM on the NBFC. So therefore, it will not be taxable in the hands of A to Z. See, the service is taxable, but it will be taxable under RCM. So liability to pay GST is on the recipient. So therefore, A to Z proprietary firm is not required to pay GST on that. Then, number 6, security services provided to XYZ Limited, a registered person under GST. Again, it is an outward supply. Security service provided to XYZ Limited. So it will be taxable under RCM. Why? In case of security agency services, if the supplier is other than body corporate, yes, proprietary firm other than body corporate, and the recipient is registered, so therefore it will be taxable under RCM. Then receipts from running an education institution, again this is also coming under outward supply. Receipts from running an education institution, including receipts for providing residential dwelling service of 18,20,000 by the institution to the students. So educational institution. So education institution, that to what? Category 1 education institution or any education institution. Service provided by education institution. Any service provided by education institution to its students, faculty and staff will be exempted. So therefore this 35 lakhs will be exempted here. Okay. Including the accommodation like hostel services. So everything will be exempted. Then supply value including cost of fuel for provision of renting of motor vehicle service to NPS Limited. Again, it is an outward supply. And in this case, so cost of fuel is also included. When cost of fuel is included, the rate of GST will be 5%. It is given here below C. Rate of tax on both inward and outward supply is 9% each, except for the service of renting a vehicle for which CGST, SGST 2.5, 2.5. So usually in case of renting of motor vehicles, if cost of fuel is also included, then the rate of GST will be 5%. So now, in this case, we need to know whether it will come under RCM. So renting of motor vehicle will come under RCM if 3 conditions are satisfied. Supplier should be other than body corporate. Yes, A to Z proprietary firm. Supplier other than body corporate. Recipient is body corporate. Yes, NPS Limited. Rate of GST 5%. All 3 conditions are satisfied. Therefore, it will be taxable under RCM. So therefore, it will not be chargeable to GST in the hands of A to Z proprietary firm. Even this 80,000 also not in the hands of A to Z proprietary firm. Now, what is that we need to see here? So determine the GST liability. So inclusive of liability for supplies received also. First, outward supplies on which GST payable under FCM we need to take. So what is the outward supply on which GST payable under FCM? First one, 15,000. And here, all these supplies are intrastate, means CGST, SGST. So first 15,000 into 9%. So that will be 13,000, 1,350 and 1,350. And next outward is what? Interest. Interest received exempted. Next, professional service to foreign diplomatic mission, 50,000. 50,000 into 9%, that is 4,500 and 4,500. And next outward supply, which is taxable under FCM, nothing. So this is the total GST payable under FCM. Now we have any inward supply on which GST payable under RCM? No, we don't have. And therefore the liability itself is 5,850 and 5,850. But for the remaining points, we need to write the notes as to why it will be taxable or exempted. If it is taxable, it will be payable by the recipient. So supplier A to Z is not required to pay like that. The proper explanation needs to be written. Then look into the next question, question number 39. In case of transaction at 1 and 2 below, determine whether the amounts received are liable to GST. Briefly explain the applicable statutory provisions in support of your conclusions. ABC Limited, a registered bank, recovered check discounting charges of 5,250 from a customer C and Co. Generally, interest or discount on loans, advances, deposits are exempted. But this is not discount. This is discounting charges. So generally when we take a bill or a check and do the discounting, so what bank will do? Upfront they will deduct some interest and remaining amount they will pay and they will recover the full amount. So this is discount. But to do this discount, so they will be collecting some charges. So charges on discounting will be taxable, that is not exempted. So therefore this 5,250 is taxable, as the same is not discount but charges for discounting. Then next number 2, T Limited, a dealer in AC, supplies each unit at a list price of 30,000 rupees per unit. He also has an EMI scheme where the customer can take delivery of air conditioner on a monthly EMI of 10,500 payable in 3 installments. Okay, here who is giving the EMI facility? Dealer is only giving EMI facility. Means it's what? Hire purchase financing or hire purchase transaction? Hire purchase transaction. T Limited charges 600 extra for any delay in payment of monthly installments, and this amount was recovered from customer Venkat for delay in payment of second installment. What about this 600? See, hire purchase transaction, the interest is taxable because that interest is on account of delay in receipt of consideration. So for non-payment of EMI, if any amount is collected, that will also be taxable. So this 600 rupees also will be taxable. Whereas, suppose if it is a hire purchase financing, as the interest involved in hire purchase financing is exempted, so interest on account of non-payment of EMI is also exempted. So this 600 rupees will be taxable. Okay. So penal interest collected for delay in receipt of installment in case of hire purchase transaction is chargeable to GST, as interest involved in hire purchase is chargeable to GST. Then next question number 40. Mangesh Enterprises, Goa, a registered supplier, has made the following supplies in the month of February 2022. Supply of guest house accommodation with facilities of cooling, heating, internet and parking to customers on a daily rentals of 1,500. So 1,500 will be taxable because it is what property? Commercial property na. So renting of commercial property will be taxable. Mangesh Enterprise has 20 guest suites, and during the month there was 50% occupancy, which means, so how many days are there in this month that we need to know. Catering and food service were supplied separately to those who opted for it at a cost of 500 per day of occupancy. Total amount collected for catering and food service is 70,000. Okay. And supplied monthly air conditioner, etc. So in this case, what happens is that previously we had one exemption. So previously we had one exemption, that is, services provided by way of temporary stay in a hotel, guest house, campsite inn is exempted if the value does not exceed 1,000 rupees per day or equivalent. Suppose if the charges exceed 1,000, entirely taxable. But here, this exemption is not applicable at present. Why this exemption is not applicable at present? So because, this exemption is withdrawn. This exemption is withdrawn, which means even if the amount is less than 1,000 rupees, it will be taxable. Okay. So therefore, this entire 1,500 will be taxable, and this is for which month? February. In February month, how many days? 28 days. So 28 days. How many suits they have? 20. And what is the occupancy? 50%. So which means 280 into 1,500. So 4,20,000. You understood how we got 4,20,000? 20 suits, 28 days, 50% occupancy, 1,500. On this, what is the rate of GST? The rate of GST on renting of guest house is 18%. So into 18%, 75,600. Now, so this catering and food were supplied separately for those who opted, which means it is not composite supply. Why it is not composite supply? So this will be separate for those who are opted. Even it is not mixed supply because there is no single price. So this will be taxable separately. So total 70,000 was collected. So that 70,000 will be taxable at what rate? For food catering, the rate of GST 5%. So into 5%, 3,500 will be taken. Then second, supplied monthly air conditioner maintenance service intrastate to a software company under a contract effective from 1st February 2022 for 6 months. According to the terms of service in the contract, the software company is liable to pay service charges of 12,000 for the entire period plus cost of spares and replacement at actuals. Taxes are separate and payable in accordance with statute. Mangesh Enterprise is yet to raise an invoice, though service was provided in February. During the month, the company has not provided any spares or replacement as a part of maintenance service. Further, the concern has not received any amount towards the above services. With the help of the above information, examine each of the above supplies. So in this case, here, how many months it will take? 6 months. Means a service which takes more than 3 months to complete and involves periodic payment obligations is known as a continuous supply of service. In case of continuous supply of service, so what we need to determine, so see here, first it is a continuous supply of service, and here, so we don't have the due date ascertainable from the contract, and there is no information regarding payment received in February. The time of supply do not fall in February, and consequently GST is not payable in this case. Then next one, question number 41. Agni Limited filed GST return under section 39. What is the return under 39? GSTR 3B. GSTR 3B is the return under section 39 for the month of January 2021 on 11th April. Original due date for the said return was 20th February 2021. Details of tax assessed as payable for the said month are given below. See GST and SGST. Output tax payable 1,80,000, 1,80,000, and tax payable under reverse charge 40,40. Input tax credit available for utilization, which means this 70,000 includes 40,000. Input tax credit available for utilization. Whatever GST we pay under RCM, that can be availed as ITC and utilized for payment. So which means this 70 includes this 40,000 also. Now compute the net tax payable in cash while filing the said return as well as the interest payable for the delayed remittance of tax. Actually, this pertains to January. January means 20th February is the due date. But when are they filing GSTR 3B? On 11th April. So whenever there is a delay in filing 3B, there is a delay in payment of tax. Now we need to compute the interest. We need to compute interest on what? Gross liability or net liability? We need to compute interest on net liability. So what is the net liability here? 1,80,000 minus 70. 1,80,000 minus 70. So that is 1,10,000 plus RCM liability. Because how to calculate the net liability? Gross GST under FCM minus input tax credit plus RCM liability. So 1,80,000 minus 70, 1,10,000 plus 40, that is 1,50,000. So 1,50,000 is the net liability. On 1,50,000, we need to compute interest from when to when? From 21st February till 11th April. So in February 8 days, and in March 31 days, and in April 11 days. That is for 50 days we need to compute the interest. So 1,50,000 into 18% into 50 divided by 365. So 3,699 will be taken as the interest that is payable. Okay. So this is interest under CGST, SGST. Assuming the company has an ITC balance of 2,50,000 each under CGST, SGST for the month, compute the interest payable if tax due, entire tax due for the said month was paid through electronic credit ledger to the extent possible as per the provisions of this act. So if they already have the balance of 2,50,000, even then, so this 40,000 is payable through cash ledger. Why? Because GST under RCM cannot be paid using credit ledger. So they have enough balance in the credit ledger. Using that they can set off. Okay. But RCM liability should definitely payable by cash. So therefore, this 40,000 will be the net GST liability. On that 40,000 only, now we need to compute the interest for that 50 days. That is 986 rupees. So that is the answer for this. This is a question on interest computation. What is the key point that you need to remember? Whenever there is a delay in filing GSTR 3B, interest will be computed on the net liability, but not on the gross liability. Okay. Then look into the next one, question number 42. Mr. X, a registered person in Mumbai, has made outward supply of taxable goods as under. Mr. X has become liable for registration on 1st October 2021. He was granted registration on 1st January 2022. So when he is liable for registration 1st October, granted registration on 1st January. Supplies made from 1st April to 30th September, 12 lakhs. Supplies made from 1st October to 31st December, 8 lakhs. from 1st January to 31st January 2 lakhs. Now he is filing the first return for the month of January. What is the taxable turnover to be declared in the return filed for January? So in the first return that will be filed immediately after registration, we need to include the details of the period from the date we are liable to get registered till the end of the month for which we are filing the return. What is the date on which we are liable to register? 1st October. So from 1st October till the end of the month for which we are filing return. What is the end of the month for which we are filing return? 31st January. So this 8 lakhs and 2 lakhs for 10 lakhs we need to include in the first return and accordingly pay the GST. Then question number 43. This is related to effective date of registration. The aggregate turnover of Dampur Industries of Delhi has exceeded 20 lakhs on 1st September. It submits the application for registration on 20th September. Registration certificate is granted on 22nd September. So when a person has made application for registration within 30 days from the date they are liable to register. What is the date on which they are liable to register? 1st September. What is the date on which they made application for registration? 20th September. Is it within 30 days? Yes. Then the effective date of registration is the date on which they are liable to register. So that is 1st September will be taken as the effective date of registration in this case. Second, Mehta Teleservices is an internet service provider in Lucknow. Its aggregate turnover exceeded 20 lakhs on 25th October. So they are liable to register from 25th October. It submits application for registration on 27 November. Is it within 30 days? No, it is beyond 30 days. So they made application for registration beyond 30 days from the date they are liable to register. Then the effective date of registration is the date on which they got the certificate of registration. So when they got the certificate of registration? 2nd December. So 2nd December will be taken as the effective date of registration. Then question number 44. Mr. Rajbir is in the business of trading of goods relating to interior decoration under the firm name Rajbir and Sons. He has opted for composition scheme for the financial year 18-19. He opted. Okay. He is into what business? Trading. Trading means which composition scheme they would have opted? 10-1. 10-1 composition scheme. His turnover for the financial year 19-20. Okay. Current year 19-20. So he is 80 lakhs and is expected to achieve 130 lakhs in financial year 2021. Discussed whether Rajbir and Sons can still enjoy the benefits of composition scheme in financial year 2021. Yes. So for the financial year 2021, if they are eligible for composition scheme or not depends upon the aggregate turnover during the previous year. So what is the aggregate turnover during the previous year? Aggregate turnover during the previous year does not exceed 150 lakhs. So therefore current year they can opt for composition scheme. His son wants to start a business of providing services relating to interior decoration after completing post-graduation course in interior decoration under the same firm named Rajbir and Sons with effect from 1/4/2020 and wants to enjoy the benefits of composition scheme. The moment his son joins the business, it will become a partnership firm. So when the sole proprietorship becomes a partnership firm, they cannot continue with the same registration. So they need to get a new registration for the partnership firm. So, and that new registration turnover during previous year is 0. They can go for composition scheme. But under 10-1, so they can provide services because his son want to provide the interior decoration. So therefore they can provide the services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Now, what is the turnover? We will think 80 lakhs. No, not 80 lakhs because that 80 lakhs was proprietor, sole proprietor turnover. For partnership firm, what is the turnover? 0. So 0 into 10%, 0 or 5 lakhs, whichever is higher. So they can provide services during the current year up to 5 lakhs. Okay, not 8 lakhs. So 5 lakhs will be taken because the moment it becomes a partnership firm, so new registration is required to be obtained. Then next one, question number 45. Heartbreaks Private Limited is the supplier of bakery products registered in the current financial year with effect from 1st October. In the month of October, total taxable supplies is 88 lakhs. Answer the following. Is the company eligible for composition scheme? any person who is engaged in supply of food, so can opt for composition scheme under 10(1) if their aggregate turnover during the previous year does not exceed 150 lakhs. So in this case, aggregate turnover does not exceed 150 lakhs. So therefore, they can opt for composition scheme. Okay. And next, if so, company wants to pay tax at 1% being a trader. However, Deputy Commissioner contended that ASSI is liable to pay tax at 5% under food and restaurant services category. So here, bakery products, supplier of bakery products. So if in that bakery, there are chairs and where people can sit and eat, then it will come under supply of food service, restaurant service. But in case of sale of bakery products, it will come under trader category. So the applicable rate of GST is 1% under a trader category only, and it will not be coming under supply of food service. Okay. So therefore, they will be coming under composition scheme, but in composition scheme also for a trader, it is 1% for a trader, and for supply of food service provider 5%. So in this case, it will be 1% only that is applicable. And 10(2)A is not applicable. Why 10(2)A is not applicable? 10(2)A is applicable if aggregate turnover during the previous year does not exceed 50, but here it exceeds 50, so they cannot go for 10(2)A. Then question number 46. Examine by giving reasons in brief in the context of provisions contained under CGST Act as to taxability or otherwise of the following independent supply of services. Tejas and Company of Delhi, a tour operator, provided services to Robert, a foreign tourist resident of UK. So Indian tour operator is providing services to a foreign tourist for his tour conducted in Rajasthan and Agra for a sum of 2,50,000. So we have an exemption. What is that? Services provided by an Indian tour operator to a foreign tourist in relation to tour conducted fully outside India is exempted. But where the tour is conducted in Rajasthan and Agra, so therefore, and Jammu and Kashmir also. Jammu and Kashmir, so it is not outside India, consequently this service will be taxable. What if partly it is in India, partly outside India? Then proportionately, number of days tour conducted outside India or 50% of the total consideration, whichever is lower is exempted. We have an exemption like that. Then look into the second. Miss Purnima acts as a team manager for Indian Sports League, a recognized sports body. She was contracted by a multi-brand retail company to act as a manager for a tennis tournament organized by them and was paid an amount of 5 lakhs. So services provided by a team manager, individual as a player, referee, umpire, coach, team manager is exempted. But they should be providing to recognized sports body. She may be a team manager of recognized sports body, but here they are providing, she is providing services to a private person. So therefore, consequently, it will be taxable. So GST, Purnima will be liable to pay tax. Then question number 47. So this is again related to e-invoice only. So already we saw one question on these lines. So the same. So who are required to give e-invoice? So that particular question. And 48, with reference to the provisions of CGST Act, examine whether GST is leviable in the following situations. Government of Rajasthan has provided services to ABC Limited of Rajasthan in the month of November for a consideration of 50,000. The turnover of ABC Limited in the financial year was 18 lakhs. Applicable threshold limit for registration is 20 lakhs. Services provided by government to business entity, and a business entity turnover during the previous year does not exceed threshold limit, then it will become exempted, general exemptions. Then Government of Rajasthan provided services to XYZ Limited in the month of November for a consideration of 5,000. The total turnover of XYZ in the previous financial year was 28 lakhs, which exceeded the threshold limit. But even then, we have another general exemption where the value of supply does not exceed 5,000, then it will be exempted. So then also it is exempted. Then Jaipur Municipal Corporation has awarded a contract for construction of road to PQR. PQR failed to perform the contract and paid liquidated damages. Consideration for tolerating an act received by government for breach of contract is exempted. That is covered under specific exemptions. XYZ Limited has applied for registration under Companies Act to Registrar of Companies and paid registration fees of 13,85,510. That is registration charges under any law for the time being in force collected by government from a business entity is covered under specific exemptions and it is exempted. Delhi government has charged 50 lakhs from Agrocare Limited for allocation of natural resources for agricultural purpose in the month of November 2021. So this assignment of right to use natural resources, lump sum amount, one-time charges, so is exempted if it is assigned before 1/4/2016, but it is November 2021, therefore it is taxable. So 51 will be taxable. Okay, and that too it is taxable under RCM. Government will not pay, so this Agrocare Limited will be liable to pay GST. So Agrocare Limited will be liable to pay GST on 50 lakhs under RCM. Then XYZ Limited has paid to Customs Department 50,000 on account of merchant overtime charges. Merchant overtime charges collected by government from business entity for clearances after office hours will be coming under specific exemptions, therefore it is exempted. XYZ Limited has made an upfront payment of 80 lakhs to Bihar government on account of assignment of right to use minerals in the state of Bihar. It will be taxable under RCM. Why? Because only if it is before 1/4/2016 it is exempted. So same is assigned after 1/4/2016, therefore it will be taxable. Then next, question number 49. Geeta Services Limited, registered under GST, is engaged in providing various services to government. The company provides the following information in respect of services provided during the month of April. Supply of manpower for cleanliness of roads not involving any supply. So this service is provided to government. So services, any service provided to government in relation to the function entrusted to it under constitution is exempted. So cleanliness of road is a job of the government. So they outsourced it to Geeta Services Limited. So it's a pure service, it is exempted. And composite supply is also exempted if the value of goods does not exceed 25% of the total. Now see the second point. Service provided by fair price shops. Yes, service provided by fair price shop, that is ration shops, they will be getting a commission. That commission earned by fair price shops is also exempted. Service of maintenance of street lights in a municipal area involving replacement of defunct lights and other spares along with maintenance. Generally, replacement of defunct lights and other spares constitutes 35% of the total supply. So composite supply, again, any work which the government is required to do, if they outsource it to any other person, so if that person is providing a composite supply of goods and services, if the value of goods does not exceed 25% of the total, then the activity is exempted. But in this case, the value of goods exceeds 25% of the total, consequently it will be taxable and it will come under FCM only. So supplier will pay GST in this case. That is, third one will be taxable. Then fourth, service of brochure distribution provided under a training program for which 70% of the expenditure is borne by government. Suppose if greater than or equals to 75% of the expenditure is borne by government, then the training program is exempted. But here only 70% of the total expenditure is borne by government. So therefore it will be taxable and supplier will pay GST. So first two are exempted, next two is taxable. Then last question. Mr. Gauri Shiva, a registered person in Punjab, supplies goods taxable at 12% in the states of Punjab and Haryana. He has furnished the following details in relation to independent supplies made by him in June. So whenever it is B2B supplies, always we need to report in GSTR1. Discuss the manner in which details are required to be furnished in GSTR1, invoice wise or consolidated. First, B2B supplies always invoice wise. B2C intra-state always consolidated. B2B always invoice wise. B2C intra-state always consolidated. B2C interstate greater than 2,50,000 per invoice wise, otherwise it is consolidated. First. So registered person, B2C, so invoice wise. So this will be invoice wise. And Mr. B registered, B2B, invoice wise. Don't say anything. B2B is invoice wise. Now B2C, B2C intra consolidated. Then again B2C intra consolidated. So B2C inter more than 250, so invoice wise. And Mr. N, B2C inter 50,000 consolidated. Then Mr. O, unregistered person, B2C interstate exactly 250 consolidated. Only if it exceeds 250 invoice wise. Then B2C inter 280 invoice wise. Then registered person, B2B always invoice wise. So what are the transactions which are to be given invoice wise? This 220, 225, 3 lakhs, then 280, 150 and 410, we need to report invoice wise. Rest of the things we will do consolidation. Okay, in that interstate wherever it comes, interstate wherever it come in consolidation, so that we will consolidate state wise, and intrastate we will do normal consolidation. So that is what we need to write here. So what we need to do, each and every point invoice wise, consolidated details, like that we need to report. So this is the end of Mighty 50 revision, and I have covered almost all the topics and which are very important from exam point of view. So these are some probable questions are there, some RTP questions are there, even some past exam questions are there. So this will be like a revision for you, and all the very best for your exam. Prepare well, and I will be doing a marathon on rocket revision, that is on your day before exam. So I will be uploading the video on rocket revision that you can watch, and so that you will get the benefit with related to this. And we will again meet in CA final. Thank you all. Take care.